Thank you for coming, guys. Really nice to have improvised.
Yeah, congratulations. John McEnroe said on the coverage afterwards, you can make an argument that it's not the finest. That's a pretty big call. That's what 24 slams. I'm just wondering, with everything you've been through over the years, where this sits.
To be honest, I wouldn't dare to call it ever finest ever, but definitely the finest in the last couple of years. Under the circumstances and semis against, Sinner, who has been playing best tennis of his life in the last couple of years, particularly here, two-time defending champion. Doesn't get better than this. I mean, honestly, when I started my preparations for the new season and kind of set the goals, and it's no secret that Grand Slams are where I want to play my best tennis, but it becomes, I guess, more difficult for me to motivate and myself, and I ask myself questions. Okay, what is it that I'm looking for from myself, and I was imagining really playing against Yannick and Carlos at the final stages of Grand Slams this year, and battling it out and really giving it all that I have. So very fortunate to already get it in the first slam of the year. So big win, very proud, very happy, very relieved as well, because it was physically very demanding and grueling.
Making a reference on the great final from 2012 against Rafa.
Yeah.
In terms of the volume, you didn't have to play another match after that. You have to play 2 days.
True.
How do you go about it?
I don't know. Let's see. It's almost 3 a.m. Let's see. I cannot make any predictions right now. Definitely not going to train tomorrow. Just going to use every hour I possibly can to recover and hopefully get out on the finals day feeling somewhat refreshed.
Well done. You were obviously pretty upset about your level the other day, or 2 days ago. How do you explain playing at that level 2 days ago, and then playing as you did tonight, which was just about hitting the forehand the way you did, serving, you were like 80% in the four sets. How do you get from there to here?
Well, I never stopped doubting. I never stopped believing in myself. There's a lot of people that doubt me, and I see there's a lot of experts all of a sudden that wanted to retire me or have retired me many times in the last couple of years. But I want to thank them all, because they gave me strength. They gave me motivation to prove them wrong, which I have tonight. And for me, it's not a surprise, to be honest. I know what I'm capable of. So I've had many times in my career matches during the Grand Slam where it's just one of those days where you're not feeling your best, and you try to find a way to win with everything that you possibly have, even though the quality of tennis is not even close to where you want it to be. So that was the case, and again, I was lucky that obviously Lorenzo got hurt, and he retired that match. 2 days later, obviously different opponent. I knew exactly what's expecting me on the court, and I came out with the right, great clarity and strategy and game plan and what needs to be executed. Obviously.
All right. Okay, I didn't update Railtown from yesterday, but we have 17,400,000 shares, which is great. I know this is we're literally 1 week from a year since they announced AIP. So, various, I wouldn't call them representations, but kind of, assurances that things are imminent. Well, that wasn't worth much. But I think we're coming to the end of our long delay. On the other hand, this AI trade in the market, everything is down. The markets are down. The Dow is down 350, which really isn't very much. NASDAQ is down 200, S&P down 41, and everyone, the message is negativity on AI. Who knows what's going on? It could be the fact that we've sent an armada to attack Iran, and there's a risk that hypersonic missiles will blow our ships out of the sea. I don't know. It could be the leverage used in the carry trade might be causing some trouble. Could be private equity shops feeling stress from their valuations. It could be that real estate looks like real estate is starting to look as bad as it was in 2008. I don't know, though. I don't know, because the banks apparently are a little bit better. We'll just watch it. But I remember, I think it was August of 2008, a colleague of mine said, I'd get out of the market, but everything was doing well, you know. And later on that year, he was right. So maybe that's what's doing it. But I have a feeling all that's really going on is a correction. It's a pullback. And I'm sure it'll be I think the market will start its climb after scaring, you know, loose hands or weak hands out. But that might be too simplistic. I don't believe headlines get it correct. They don't. They just come up with an answer that sounds good. Let me get Djokovic down. Railtown is down today, almost 3 cents at 26 cents. I'm not surprised that it would pull back and test where it's breaking out. If it comes underneath, and of course my perception of what the chart is doesn't have to be correct, but if it comes down and penetrates support now, which used to be resistance, I don't think it's likely, sorry for yawning, to create a further extension of that downtrend, but of course that's what they're trying to do. I thought about that John Ruffalo interview we listened to yesterday, and one of the things that keeps sticking out in my head is that a lot of companies in Canada are not getting funded. That doesn't sound so good. Anyway, Railtown is 26.12. Finger motion is down a little bit at 121. GDC is down 3 cents at 442. MTEN is down 31 cents. It's now $2.04. So basically, it's a penny. ZJYL is down. It's at 14 cents, 14.44. Railtown's volume is low, 57.48, 57,480. I think that's a bullish indicator. The last trade was 2,500 shares at 26.12. It's interesting. Why didn't they sell that? Why didn't they say, oh, maybe someone bought that. That might be a buyer. That might be a buyer. The low on the day, though, is 26.12. So where does all this stock come from? Why didn't they sell it when it was higher. It's all rigged. It just drives me crazy. But we have to acknowledge that most of the time, if you're negative on speculative stocks, most of the time, if you say soothing negative things like, why don't we right size your position and diversify in a bunch of other crappy stocks, and we'll wait 2 years. Well, I don't find any of that very useful. It's useful advice if you're already wealthy and you're sitting on a nice diversified portfolio of assets. That's useful. But if you're not there, it's not going to get you there. I'm trying to think what day it is today. I think it's Wednesday, and it's the last day of the year, or tomorrow is a month. So they may be trying to get this down just to be able to, as ever, to show their prime broker and whoever's lending them the money to trade, hey, we're winning here. And it's the same thing over and over again. It's so boring to talk about. There's 52,500 for sale. That poor son of a gun, he had a chance to sell it when it was 70 cents on the ask. He could have sold it for 69 cents, but he's just ridden it all the way down. I mean, if you believe it means anything, it doesn't mean anything. The reason I'm yawning, I watched as best I could. I fell asleep for part of it, woke up for the rest of it, but I watched Zverev play Carlos Alcaraz. Everyone loves Alcaraz. Everyone loves him. He's about 12 years old. Zverev, I think, is 28 or 29, and he's a great player. I never really liked him before, but he's never won a major, and he was world number 3 briefly, world number 4 right now, I think, might be 5. But anyway, he's never won a major. But he did. Some people were on his side. And then that delayed, they had a 5-set match. That delayed Djokovic playing Sinner, and everyone thought Sinner was going to win. And I watched the first match, and Djokovic immediately was broken, lost the first set. And then the second set, I kind of fell asleep, and I was surprised because it was so early in the morning. I was surprised when I woke up that he won that one, and they were in the middle of the third set, so I watched it, and I can't believe it that Djokovic won. The guy is as impressive as anything. So that's why I'm a little tired. It's obvious now, of course, that whatever's going on with Railtown and TELUS isn't going to perhaps be further disclosed, or maybe there's some other thing that needs to be disclosed. I tried to get information yesterday, but nobody picked up, which I find actually quite insulting, because I think there's a layer of responsibility there to pick up the damn phone. But whatever. I have that effect on everyone now. Talk to a guy 3-4 times a day. You call him back, and then he never calls. It's just, I don't know. Human beings never grow up past high school, I guess, including me. I'm not saying I'm any better than anybody else. So I think anything that's going to be big for Railtown / Telus is going to be February. That's not much of a call right now since February is next week. But the good side of that is I think we're nearly there. Could be March. I do still think it'll be the first quarter. I'm going to show you a couple of things. The more we've got a balancing act in some ways, because I am convinced at some point this stock market is vulnerable to the end of the baby boomer bull market. The bull market that started in, when does anything really start? It might have started when Jimmy Carter appointed Paul Volcker to the Fed, and people believed that inflation was going to be tackled. Might have started when Reagan said, well, there you go again. Might have started then. But I remember the first 2 years of Reagan's administration were disastrous. So it's probably started in 82. But it's been pretty much one way in everything from real estate to cost of college educations to military spending to home prices, office buildings, everything, bonds. And I think it's going to come to an end. But that's the hardest thing. Does it come to an end this year? Or does it get delayed? Does AI actually change things because there's so much spending that it replaces the demand that might otherwise have to come from government spending? No one knows. But if the market's correct, I would think we would prefer that if Railtown is going to be acquired, that it happens before that. But it doesn't mean it won't happen during it or after it. It's just different multiples. In a crash, maybe one or two banks go down. And you're seeing headlines now that everyone knows this now, that banks are vulnerable to a squeeze in silver. Just because you're hearing it for the first time doesn't mean it's new news. But it is true. If there were a correction, or if silver were to bring down a bank, you could see the capital markets under a lot of stress, and deals will stop, or they'll be priced inexpensively. So that's the needle we're threading. I think is we would like to see action in terms of revenues or predicted revenues or proof of concept that will lead to revenues sooner rather than later. And it's been a year. It's been a bloody year since the AIP deal was announced, but it's probably been a year and a quarter, year and a half since I heard the story. And the guy doesn't even bother to pick up my calls. So I really appreciate that. He doesn't listen, so I'm not. I don't care if I talk to him again. I think it's insulting. I haven't called him in a month, And you would think he'd take the time to. Anyway, let's move on from that feeling negative point that I just made. So the longer this takes, on a macro level, it increases our risk. Luckily, the stock is priced as if the company's going out of business. So I don't see how, but things can happen. But I just don't see how. Even if things fell apart, the stock's already priced for all of that. But it's time is increases the risk that the overall stock market crashes. That doesn't mean the play will be over. That doesn't mean everything will be a disaster. It just means more time. I think when the market crashes, and I don't know when it will, you could see a 9-month experience of headlines, and then it turns around, snaps back up with government spending and Fed buying. So it'll be a relatively short period of time in a human lifespan. But for those of us who have been in here a year, it's like, darn it, I don't want to have to go through that. I think AI is going to be one of or aspects of AI are going to be one of the industries that take leadership in the next movement of the market. So and I'm not saying that's going to happen right away. I mean, there's all sorts of negative news out there on restaurants and credit cards and homes and all that. But that doesn't mean the economy's going to collapse. It's just changing. And we have a pretty resilient, strong economy. So I don't know. All I'm trying to say is I would like to see Railtown and TELUS and whatever else is going on kind of happen February, March. And then if it does, that sets up sort of proof of concept. Do we see that? To me, it's a couple of things. Do we see that this platform that Railtown has is critical to the success of Canadian sovereign AI factories, and there's only one right now with TELUS, and is it critical for the user experience on top of those factories? If those are true, then Railtown becomes the must-acquire company out there. If they're just another knockoff, maybe not. I don't think that's the case at all. But if it's just as successful in people's minds as LangChain, I think the stock's $10 stock, $7.50 stock, somewhere between $1.5 billion and $2 billion in market cap. So I'd like to start seeing that evidence of that. And I think you'll start feeling better too. But it's all held up. Of course, I have no timeline. It's all held up by some piece of material information that needs to be disclosed. My guess is they were waiting for Rail Engine to be complete, ready to go, and that sets up TELUS, after they get their public service announcements announced out of their hopper of press releases, that sets up maybe TELUS saying, well, we're terribly pleased with Railtown's success at our Who's a Moose TELUS center and our data center, and they start maybe a campaign to move their business over, their businesses over to that data center. And I think that'll all be good for Railtown. But if Railtown becomes a critical piece and the proof of concept is there, the next thing we're looking for, to me, is someone to buy us. Because I don't think Railtown, I mean, it may be able to, but I don't think Railtown's going to be a unicorn. It could be, but if you're a unicorn, that means you have to have resources to keep up with NVIDIA, keep up with Microsoft, keep up with Tesla. And I don't think that works to the benefit of shareholders. The risk of dilution in financings, I would think, is pretty high, but it depends. It's all about what's the revenue, what's the demand for the product, what's the valuation. They could do it. But I think for from the company standpoint, it's better to sell than try to stand alone. And I think from the acquirers, it's better to buy it than start from scratch. So I hope that there's early interest in buying Railtown. But that means a lower price, I think, in a buyout than what if we waited for revenues to show up and there was a multiple on revenues. It might mean a lower price if it gets sold now. If you wait till the summer or the fall and revenues are projected at 300-400 million annually, well, all of a sudden the big buyers and the valuations go up, but that's another 9 months from now. So that's kind of where I think we are in the broader background. My opinion, as soon as the buyers can come in, as soon as whatever news needs to be made, I think Railtown very quickly is going to achieve a valuation similar to Railtown's summer of 2025, not Railtown's, Langchain's summer of 2025 pricing, which was 1.25 billion. And that would be roughly $6 a share, maybe a little more. And I think that'll happen fairly quickly. I'll show you, I think I have it here, but in all scenarios I can think of, exciting or just flat, and once you risk them, I think a short-term buyout number, I don't know, something either side of $10 a share, maybe by $4, $5, if there's not a bidding, some sort of bidding war. If there's a bidding war, well, all bets are off the table. It could be exciting. The alternative is that the company works for the next 9 months or a year and proves up its revenue, and the revenue explodes upward, and we have a $10 stock in the market, and maybe it's on its way to 20 or 25, but might have to wait. So I don't know. I'll show you what I asked. I asked a couple of questions to try to get the sense of what a computer thinks, and I'll show you what they said. We don't know. I think the surprises are going to be to the upside. I think the time frame. I still think it's going to be much more quickly than people expect. A buyout. I'm a little less. I'm unsure about where that buyout will be, and I'll show you what the questions I asked. Let's just see if, but it's, I think it's 20 or 25x from here, and that's plenty. Lawrence Sanchez has hit a despicable new low. Our news is so bad. I just want to see what the financial headlines are. Who's Catherine O'Hara? She's dead, but I don't know who she is. She's a legend, but I do not know that legend. Let me see what the headlines are on the market. Oh, Warsh may still face hurdles to get to Fed chair. I wonder what bank he comes from. Gold below 5,000. I'm trying to work on that project, and I probably have to start calling some of you. I got several emails. I appreciate that, but I don't want to let that one go. Microsoft stock dip. I thought the news was mostly good. Microsoft Corporation Fairweather AI data centers drive Azure growth. Fed decision in March. Is it time to buy Microsoft? As Microsoft stock crashes below key supports, should you buy the dip? Microsoft slides and Meta surges. What Microsoft earnings mean for NVIDIA stock? Microsoft down 10% because of spending. Goldman cuts Microsoft's target. It doesn't seem to be down that much right now. Tech companies are still spending heavily on AI. Microsoft, I guess that was almost a day ago. Microsoft stocks plunges 10% as earnings drive $357 billion market cap wipeout. Do you see that? Just 10%. That 10% decline, if they paid us 1 point of that to buy our company, it'd be $35 billion. Microsoft earnings report brings out the bears as Azure growth disappoints. Ah, there it is. Why investors rewarded Meta and Tesla but punished Microsoft despite revenue, I guess, gains. Microsoft earnings prompt tech sell-off. See, that's what's the whole AI space. Everybody and the managers too, they don't want to perform less well than their peers. But everyone's on edge, I want to be the first one out if the bubble pops. And so they're jittery. All right. Let's say we read enough headlines. Railtown is 2501 to 267, 2599. Are you out of your mind? And let me go through your comments, and then I'll show you what I brought today. And let's go. Oh God, Crabby Claus is here. Hey T Alex, you're number one. Hey Steve, silver, ouch. Well, it's volatile, and this is why I'm very enthusiastic on silver. I love it, but I've been telling you, I feel like we missed the trade a bit, and I wouldn't chase it. Now it's pulling back. Maybe that's more attractive, but the people manipulating over-the-counter stocks, they pale in comparison to the manipulation in the silver markets. I think the Western financial system, it's all we have. I mean, it's how commodities are priced. It's always on the margin. So the cost of, I don't know, what's a good example? The cost of oil, it's always priced on the last barrel sold. And then that prices the entire value of every company out there. And silver, the price is totally manipulated. The banks don't want to get in trouble. Silver is probably just slightly behind oil as critical to modern lifestyle, but they price it as if it's a throwaway metal. And that's 4 or 5, well, actually it goes back from the Roman times, maybe prior to that. But none of the theories matter. I don't have to talk about all that. I could go on and on. All that matters is, just like with the over-the-counter stocks, they wait till the buying is sated, and when there's a correction, and then they just sell paper silver on the markets. They'll sell an entire year's worth of production in 1 hour. And it's not price discovery. It's just manipulation. But it helps the banks, and therefore it's allowed to go on. It won't last forever, because silver, unlike other commodities, silver is there's not a lot of it. There used to be, but there's not a lot of it above ground. And the mines that might be able to produce a lot of silver, they're not going to automatically turn on and flood the markets straight away with additional silver. There's many that think the silver's not even there. I don't know. As price goes up, they'll find more. But at these prices, there's not silver. So it's just a correction. It's volatility. Silver is extremely volatile. And at $25, $20, $30, to me, that was a slam dunk asset. It was even as low as $18. But once it crosses 100, they don't want it to stay there. And everybody's buying. It's like everybody chasing Bitcoin. You just got to kind of say to yourself, well, I missed that run, and wait till everyone gets negative again, and then you can buy it. I think it's hard to get it exactly right. And that's a hell of a run in silver. Steve, silver since 1980. So that's 90, 2000, 2010, 2020. That's 45 years ago. Almost 46 years ago. Silver hit its nominal high. And in all those years, silver is the only asset which not only didn't make highs, didn't participate in the everything bubble, it didn't even get back to its nominal high. It's on an uninflation adjusted high. Silver traded for $52.50 at the peak of the Hunt brothers look, I don't think they cornered the market. They bought a lot, and they trusted the banks and the agreements that they signed. But they're just big guys. They're not. They didn't have I don't think they had the ability to corner the market. But the margin rules changed, the settlement rules changed, and the system crashed that down, and they lost everything. Pretty sad story. But it's been that long since silver went above $52.50. Well, what was it? December? I was trying not to watch because it was too hard, too painful. But in December, silver finally crosses $52.50. And then it goes to 60, 70, 80, and then it's over 100. Things don't, they're going to fight back. And anytime there's weakness in the market, there's probably margin calls. They're going to try to drive it down, but it's a buying opportunity probably than a selling. But I don't know. I just kind of feel like the place to be right now is Railtown, and then we'll see where silver is. After Railtown maybe is up 20x or 25x. Railtown's sitting out there for a year, and the best information I have is there's a lot of excitement ahead, but it's been a year, so I guess I can see why people might choose to question my judgment. But I think we have to see we have to wait and see what happens. Two things. What happens when whatever news is holding up research and institutional buying, whatever that is. And I think we really benefit by waiting to see how rapidly that Thales data center ramps up customers and revenue. I think it's going to be like, girls going to buy the new Taylor Swift album that's going to sell out. Does she sell out? Apparently she's bigger than the Beatles, which I have a hard time believing. Yeah, I'm sorry that silver's volatile. It's very volatile. It wasn't so much when it was lower because no one was paying attention. Now everybody's in there, and the hot money, the momentum, all of that. I think it's interesting watching Bitcoin. I believe those investments or those vehicles are going to do fine, but it'll be interesting to see what happens in a market, a really severe correction in the market, unlike anything anybody's seen. A Great Depression type correction, 1929 type correction. What happens to the crypto versus gold and silver? I think gold and silver will be down for a while, but then I think that everybody's going to go into gold and silver. So you just got to ride it out. If you're trading it, you missed a trade, but if not, you just got to hold on to it. Silver will be 500 to 1,000. I think silver will be, gold right now is 5,000. And if you took 16 to 1, 15 and a half to 1, which is the ratio of silver in the ground historically has been 15 and a half ounces of silver for every ounce of gold mined. And that goes back to Rio Tinto, the river that was red in Spain, Roman mining. I've told you before, the pound sterling, the coin of the realm, the exchequer, all of them, they priced the when the pound was on the gold standard, they priced the ratio at 15.5 ounces of silver for 1 ounce of gold. That's where we're headed. We're not there now. But when I started telling investors, and one guy in particular, silver was 120 to 1, 120 ounces of silver to 1 ounce of gold. I think it's now down in much closer to 80. But I think it'll get to 16 ounces of silver being as valuable as 1 ounce of gold. If you want to use a rule of thumb, use 20 to 1. But my opinion, which I haven't heard anyone share, is in the financial crises that are ahead of us, and crisis is also opportunity, I think silver will surpass gold in price. I don't know how long, a day, a month, a year. It's not going to be long, but because then the whole things can't remain overpriced if the economy can't take it. But I think we're gonna, let's call it, go to par. 1 ounce of silver will equal 1 ounce of gold. But anyway, if you take $5,000, even though gold is down right now, and you divide it by 16, silver should be 312 today if it traded at the historic ratios of the British realm. At 20 to 1, it's pretty easy. It should be trading at $250 an ounce, which is, by the way, $250 an ounce is an approximation of where silver should be trading to achieve its inflation adjusted participation in the everything bubble. So, you say, ouch, is 110, I don't know where it is, it's 95. I think 250 is assured. I think it'll be $500 an ounce. I think it'll be 1,000. I think gold is going to go to $40,000 an ounce, maybe $100,000 an ounce. But as I've said over and over again, right now you have a chance to create wealth in silver and gold and platinum and palladium. But at some point, the rest of the move will just be the collapse of currencies. And then silver is about maintaining wealth and maintaining an asset that you can convert into the new paradigm of, I guess, currency. Maybe it's going to be, something on the blockchain. I don't know. Whatever they come up with. The new Bretton Woods, which will come at some point. But silver's still really cheap. And we all should be thinking in terms of not how many dollars we have, but how many ounces of gold, how many ounces of silver, how many ounces of platinum or palladium. That's physical, but you can also own those via mining shares. And we'll start thinking that way if we stick with it. But silver's still really cheap, but it's up 5x. That would have been, and as I wanted to do and suggested, it's a hell of a hedge on other investments. But I think it's too much right now if you're someone that can't stand short-term volatility, I think silver's price is too hot to handle right now. If you don't own silver, it doesn't matter what you pay for it. You need to own silver for the long term. But if you have this trading mindset, you look at the price every day. We all do. Look at me. I don't want to look at it because I was never able to get the position established. Mainly I don't know now. But previously it was because of bureaucratic delays. And I'm sure it had nothing to do with the nature of bureaucracy today. So we're all, we all look at prices. But $100 silver by 5 years, 10 years, 7 years, that could be $10,000 an ounce. But again, if it goes that high, the last major part of the move will just be wealth protection, not wealth creation. But silver is extremely volatile. It's highly manipulated. It's manipulated by J.P. Morgan, Merrill Lynch, the Fed, probably the Treasury, and they don't want it to get out of control. Now you'll read headlines, and you've got to know about those headlines. Silver is going to take down a bank or two. My guess is it'll be Merrill Lynch first, but I haven't studied it in about a year. But from an interview I watched, but I always thought it would be J.P. Morgan that would go down. But I think Jamie Dimon has at least offset the risk. But there's no clarity on that. Silver is extraordinarily manipulated. And it's critical in everything. So I wouldn't, if you're day trading and all that, yeah, maybe you need to say ouch. But if it's a core position, I would add to it, or I would just say, oh well, I missed a trade. But $100 silver is going to be very cheap, and it could be cheap in a month. That's the risk the banks are running. But in a time frame of the next cycle, $100 is going to be really cheap. And most people here haven't bought silver yet, so they're going to be buying it at $80 and $100 and $110. But it's not like buying a CD. T.S. Alex, hi William, hello. Steve, I could have been one, but I texted that long thing out. You could have been number one, yeah. Well, T. Alex says, too bad. Joe Marty says, Novak got her done. I know, it's unbelievable. I was watching it on delay, and I knew the match was going on, so I knew there was hope. But it got to that fifth set, and Djokovic broke him. But I think in the fifth set, twice, or at least once, and maybe once in the fourth set, but I think twice in the fifth. Well, no, maybe one was the fourth. But Sinner had Djokovic on the ropes. Djokovic was serving love 40 two different times. And some resolve. He just made incredible forehand shots, serves, and both times it came back to hold serve. And that happened in the last set. And I just said, oh God, I know it's gonna. I kept telling myself, at least he's here. At least he's proven everyone that he's shouldn't retire. But that last game, he was serving it out. Add in, and I forget what it was that got it back to deuce. Actually, I don't think it was add in. I think it was 40-15. And I can't right now remember. One was a reasonably good shot by Sinner, but I think one was a return of a slice or a drop shot that Djokovic had. I don't know why. He put it right up near center, and so then we were at deuce, and then it took two more add-ins for him to win. Amazing. It was just amazing. I don't know how he does it, because I get all nervous just watching it. Jack Hamilton, good afternoon, Sir William. I hope you and all the RT fans are well. Yeah. 2533, 70 by 2598. 69,000 shares, down 3 cents, down 10% on Realtown. T. Alex says, ouch. Well, when Microsoft goes down 10%, there's this blanket shiver of fear that goes throughout the entire AI space. But also it's a great chance for the criminals to try to drive it back down. But I'm not saying that well, I guess I am saying that. The thing is, we don't have a real market. There's enough information out there on Railtown that if analysts could actually publish reports and there were trading desks and brokers followed stocks, I think this would already be, and be a $2, $3 stock. But we really don't have price discovery right now in Railtown because we're trying to put together the news reports and the overall industry. No one at the company talks to me. I got one call, is great. The guy that I appreciate very much, he doesn't talk to me anymore. He talks to Tony and talks to other whales, but I don't rate. So I doubt I'm the only one not getting information. So Railtown is vulnerable when Microsoft collapses 10%, which I don't think that's a collapse. I just think that's a pullback. Railtown's susceptible to the manipulation, and we do it all the time. We do it all the time. We look at the price and we assume it's telling us something. And it's not. We won't know enough to condemn the Railtown story or to double, triple down on it until they release whatever the hell the news is that's holding everything up. I personally think it's TELUS, but it could be something else. We were waiting on Rail Engine, I think. I think that's right. That's wait is over. But we need to see businesses move from other hyperscalers to the TELUS data center, and we need to see them move, turning their computers on, moving on a scaling basis where it's ramping up and observers are going, oh my gosh, this is really big. And right sitting as the interactive layer is Railtown. But we haven't seen that yet. All we're doing is waiting and waiting and waiting and waiting. And that's life. Life is waiting. But I haven't seen anything that condemns the story of Railtown. I've seen the typical walking it down and crushing it and mining the stock every day for half a penny, a third of a penny, every single day. But that's no different than any other micro-cap stock. Key differences here. Railtown doesn't have to avail itself of so-called financiers like Jeff Easton or Ari Rubenstein or the Kramers. And you won't see dilution and an unknowable denominator occur in Railtown because they're seeking capital. You just don't, you're not going to see it. I mean, and I guess anything can happen, but probabilities are you're not going to see it. But that doesn't mean they're going to not walk it down. But no one's selling. Today is 70,000 shares. The stock was as high as 30 cents, almost 29.77. The low today is 25.35. That's volatility. If you just call it 50,000 shares, that, just for illustration, that let's say they got it off at 29 cents and they're able to cross it or cover it at 25 cents, they make 4 cents on 50,000 shares. It's better than cleaning toilets. And yet we look at it and say, ouch. I think we should be looking at it and say, wow, we still have a chance to buy the stock. But, you know, it's been 8 weeks, I think, since the stock was 40 cents. And so it's paying, you know, I understand the ouch, but I don't know what to tell you. I think it's great progress on Rail Engine. I think it's great progress. We got through the vacation time and tax loss selling. I mean, I think the TELUS news in sort of end of October, beginning of November, or was it October 8th? Anyway, let's say October. It's transformational for Railtown, but we haven't seen any evidence in it in the price because that's how we're trading. Just look at the price, look at the charts. The price tells us everything. Well, Railtown, in my opinion, Railtown, that's not true. The price isn't telling us anything. Again, two things. Is the Railtown platform able to generate revenue and able to generate revenue in a backward ski slope fashion in terms of growth? Number one. Number two, is their platform some sort of best in class or standard that everyone's going to want to have? And then three, will research reports and institutions believe that? And will the Magnificent Seven stocks plus the two, will they want to buy it? But none of that do we know yet. From February 8th of last year, the company has told us zip about revenues. A little bit of guidance in some presentations. Dr. Tom Core gave an interview, but the shorts don't listen to Dr. Tom Core and they don't care. So Microsoft, Azure sells off. Microsoft's a partner with Railtown. I don't see anybody selling 71,000 shares volume, but there's nobody buying. So nothing's changed. Nothing's changed. I'm not surprised that Railtown didn't go straight up. Well, the last trades, 200 shares, 25.63, 350 shares, 25.89, 500 shares, 25.5, just have to get out. It's all manipulated. 500 shares, 25.35, 200 shares, just have to get out at 25.4. It's the same crap. I don't know how you can say ouch. But I understand it at the same time. I want to get away from these stocks. I just don't want to deal with them. And I don't think Railtown's one of them. But there's, again, there is some level of material, non-public information which has not been disclosed. It needs to be disclosed. I can't tell you what it is. My guess is it's the revenue deal or the revenue projections with the TELUS data center, the revenue split between the TELUS billing TELUS's clients, and the CEO of TELUS predicted that TELUS in the AI space from AI-enabled technology will grow their revenue to $2 billion by 2028. By 2028, in this 2-year period, and he should know what he's talking about. And the only technology he can possibly be talking about, in my opinion, is the data center. There's a second one and 2 more on the way. The only sovereign data center in Canada right now. There'll be more. There'll be more. It's highly competitive. But TELUS's data center is already built. The land was located, the permits taken, the project undertaken and built. NVIDIA stacks are in there and HPE. And they have a rolling technology agreement. So NVIDIA's best computers will always be in these. I don't know if it'll be in every stack, but they'll always be upgraded. And it's hydropower. The cost of electricity there is half. And they have 3 customers. The data center's been running since the summer. One's a healthcare company, one, they got 3, so they're putting it through the paces. I don't know. I think they're testing the large language, the language model level, whether it's large or small models, but the large models. That's Cohere, Anthropic, and OpenAI are the examples. My guess is Cohere will be the language level, but if you look them up, I think they're doing business with Bell Canada. So I don't know. It might be Anthropic. We don't know that yet. But those pieces they got to put together. It's like opening a new restaurant. You've got to make sure that the dishwashers work, the waiters know what they're doing, the bartender is clued into the system of ordering drinks. You've got to know that the receiving knows how to bring the deliveries in and put it in the proper freezers and fresh bars, anyway, where you put produce, and you got to make it all run. So you don't just build it, have it all installed to the architect's drawings, and then it's ready. Okay, let's open on Friday. No, you hire people, you train them, you give them encouragement, you break into groups, you learn about the wines, you learn about the menu, you memorize certain parts of the menu, you know what's better about your restaurant than anybody else. The maitre d' and all that, learn the table numbers, they work together between cigarette breaks, and you run the back dishwashers and cleaning, and then you have the chefs and you have the line chef, and you test the order system, make sure that works, and then that you feel like everyone's ready. You, for a couple of weeks, You have fake dinners, fake lunches. Everyone in there can invite their friends. And you have trial runs. And then you have a soft open, and then you have a hard open at the end of the month. That, I think, is what's going on with the TELUS data center. I don't think it's had its hard open yet. Obviously, it's open for business, and a restaurant could be open for business, but they could be saying, look, we're new. We'll let you have that for free. Well, all right, we'll charge you for the coffee, but we're still, pardon our appearance type thing. But you have a hard opening, and then Phyllis Richmond comes, she writes a review, and then people can't get a table for 6 months out. That's what I think is yet to happen at the TELUS data center. It hasn't happened yet. So you look at the price, this price doesn't tell you anything about the capacity of the data center. It doesn't tell you anything about the contract between Railtown and TELUS. It doesn't tell you anything about Darren Entwistle's goal of increasing revenue from AI-enabled sources at TELUS, who does $20 billion a year in revenue. They want to increase revenue from the AI-enabled technology to $2 billion within these 2 years. The price doesn't tell you anything about that. They don't tell you that Railtown's going to get a percentage of that revenue. Now, we don't know that number, and we may never know that number. I picked 20%, partly because I think 10% is too low, and 30%, 40% probably are a little high, considering they got a split with Cohere or Anthropic. But I really don't know. Analysts will know when we can see research reports. But this price doesn't tell you anything about that. T. Alex, if 125 companies, according to Dr. Tom Core's interview that he gave with Rebecca Kurzweil, I'll try to find it again. 125 companies in the network are doing over $100 million in annual spend on other hyperscalers, other stacks, in order to build the products they sell to their customers. He's going to move them to the TELUS data center. If you pick 125 million, over 100 million, pick 125 million, and you do 20% of that comes. Obviously, the network of companies will still be spending that money, but they're already spending it now anyway. But the 20% of the total revenue will come, in my guess, to Railtown. It'll be 100% profit, or as close to it as you can imagine. Well, 20% on 125 million is 25 million. Annual recurring revenue from a network of companies that Railtown owns. And Dr. Tom Core gave you the numbers. And Railtown has a deal with TELUS. If we bring the customers and they use our product, we split the revenue with you. Well, you know that's the price isn't telling you that. Just take that number. Just take that number, 25 million. Don't focus on cross-selling. Don't focus on other customers. Don't focus on other data centers. Don't focus on anything except the network. 125 companies out of 180 companies. Well, 25 million a year in top line revenue, which is also net revenue, which is also cash flow, which is also profit, divided by 210 million shares, gives you 12 cents a share annually in cash flow, profit, revenue from that source alone that they control. The stock's trading at 25 cents. So do you think that the stock should trade at 2 times 100% margin revenue? That's where the stock's trading. 2x on the revenue that you can put together, because you have the time to listen to Dr. Tom Core being interviewed in Rebecca Kurzweil's excellent interview. You have the time to do it. These people aren't doing that. And that's one source. If you take Darren Entwistle's third quarter earnings message, and it's in a transcript, I've shown it to you, and you take $2 billion and you assume that's coming to this data center that they spent tens of billions building. They bet the house on this, so they're going to make it work. $2 billion. Well, what don't we know? We don't know if that $2 billion revenue comes from the data center stacks, or is there some other thing in there? But it's probably the data center stacks. We don't know that Railtown has an exclusive or not. Maybe they're going to invite Langchain in. Who the hell knows? We don't know that Darren Entwistle, even though he's the CEO and he sees the books, but he might get distracted making sure that children in Nigeria have fluoride in their water in a project that TELUS is doing to make sure that everyone in the world has access to Canadian dentists. We don't know. They get distracted by all these things. So for me, I take the $2 billion, I cut it in half. Is that still too high? Maybe. But what are you going to do? Make up numbers? He said $2 billion from our AI enhancing technology, something like that. I think it's the data centers. Take $1 billion. You assume 20% split with Railtown. Now you could say, well, how do you know those people are only, they might use something other than Railtown? Well, I cut it in half already. I already cut it in half. But maybe that's not enough. But let's leave that aside. On $1 billion at 20%, that's $200 million a year in annual recurring revenue to Railtown. If you assume a little growth, it's $1 a share in annual recurring revenue, forward revenue, but it's going to grow during this 2 years. $1 a share. So Railtown should trade at 25 cents? I really question whether you should be looking at the price of Railtown and saying, ouch, or if you should be looking at the price saying, oh gosh, it's still taking forever, but you know what? I'm going to buy all I can. if Railtown grows its revenues, and it still has to do it, no question. From those two sources, let's say over the next 2 or 3 years, forward revenue to $1.25 a share from essentially zero. And it's still going to be growing. The annual revenue, cash flow, net revenue, and income from those two sources on a per share basis, annual recurring revenue will be 5 times today's price. Is this price telling you something? I don't think the thing you should be saying is ouch. You should be saying, hot darn it, I'm buying more. That's what I think. But I know it's just depressing. It's just constant. T. Alex says time to buy. Oh, I guess I could have kept my mouth shut. Finger's the only thing in the green right now. It's up half a penny at 122. The Dow is down 0.5%, 260. NASDAQ is down. So all the headlines, oh, AI. I wouldn't believe those headlines yet. There's hundreds of billions of dollars sitting in private equity and investment bankers' hands and in retirement funds and retail accounts, going to put it to a Morgan Stanley robotic plus trust fund. And I wouldn't, looking at the day-to-day is just torturing. It's just torturing. I actually see it the other way. It's like silver. The last 2, 3, 4 years, I mean, I've been following it, studying it a long time. But if you'd been watching it every single time, you'd drive yourself crazy. But then all of a sudden it breaks out and it goes up 5x, depending on where you started. 4x. And that's what's going to happen to Railtown, I think. Now, the key thing we're looking for Railtown is a breakthrough in disclosure, which leads to research and buying. We would presume. But we're also looking for execution. That means that the data centers, the current AI model, which apparently is going to change at any time, but the current AI model is I can't spell this word. That doesn't work. I'll see if that works. NE, maybe. And then it's user. So it's basically this: your compute power, NVIDIA, the electricity, HPE, the stacks, and then it's your neural connections. I don't know how to spell it, but it's your all the data's down here, but it's the reaching into this and bringing up everything relevant when your user says Marco Polo, and then you bring up everything, the Silk Trail and pasta and playing games in pools. and that's here. And then in order to make all of this work for the user, you need your frameworks. And in our case, that's rail tracks, rail engine, which is real time. By the way, apparently LangChain doesn't have that yet, but of course they'll get it. Everything is going to be, and then conductor. So we need, what we'd like to see is two things. We'd like to see the users rapidly move from other hyperscalers down here for Teles's compute power and NVIDIA's and the cheap electricity. We want to see that ramping up in revenues, which we're going to get a piece of, every bit of it. So that's one thing we want to see. The other thing we want to see is that these frameworks, this platform, is the best. And it solves the problem. And it is hard to replicate. It would take a major 2 years to come up with it on their own. We want to see that this thing is successful at one data center, or maybe two, which is they're going to have a second data center, so that maybe the hyperscalers all say, you know what, we need Railtown on all our data centers. So those are two things we're looking for. Right now, there is nothing being discussed about nothing, as they say when you use double negatives. So you look at this, you go, ouch. And you say, time to buy. I go, time to buy. Jack Hamilton, please put me down for two. I love it. I love it. I think it's fantastic. That's very Djokovician. That's very Djokovician, to keep playing, keep hitting the ball back, buying 222 more. That's great, Jack. Awesome. I wish I had some squid to do it. Congratulations, Justin Babish. Added 2,000. Wow, you're catching up with Donna. Would have gotten cheaper. Oh well, happy to break 70,000. Should have waited a couple hours. I know, but that's got to be. I mean, just like when I watch tennis, I seen Djokovic make a bad pass, or why'd you hit it right back to him? For him to win, he's got to put it out of his mind. He's got to focus on the next point. And we just got to focus on the next trade. Remember, Justin, if you could have purchased it a little bit cheaper, maybe gotten some more shares, there's still another decision out there, which is, when do you sell? I personally, even though I was ridiculed by Platinum Blonde and Tony about it, and they're very reasonable, thoughtful people. So obviously their concerns have higher standing than mine. So to criticize them, I'd be childish. But I will point out that you may never sell the stock. It might get bought out by Microsoft or NVIDIA or something, and you don't have to make that decision. But when you're accumulating stock, you're never going to get it perfectly done. And using your example, let's say you could have purchased 70,500. Well, let's assume the company doesn't get bought out and you face a situation where you have to decide to sell it. Um, you're not going to get the high either. So any mistake you've made here in buying, you might make a similar mistake in selling, or you might have a windfall when you sell. You never know. So don't be hard on yourself. Just the great thing about building a position, you don't have to get an A plus. You just do the best you can, and you have this blob of stock. I think your position is fantastic. I love it. 70,000 is huge. I do think my larger targets, like 55, which I still stand by as a target as revenues play out. The problem is it might happen inside of an acquirer. So anyway, we can't control that. We can't control that. The buyout, my guess is, would seem really attractive at $15 if it happened, if there were offers to buy the company, say within the next 90 days to 6 months. So I don't think we can get focused on where we're going to sell it either. If a Microsoft or NVIDIA buys it, shareholders vote on it, we're not going to have much control on that. Anyway, I guess all I'm saying, Justin, you can't get it just right. Just be grateful that you were able to buy today under 30 cents. Fast Eddie, how are you? T. Alex, isn't Trump naming a new Fed sheriff? Apparently. Warsh. That's how people from Pennsylvania pronounce Walsh. Call it Warsh. It's how they pronounce Washington. They call it Washington. Yeah, that's apparently Delap, Nextbridge PR. Yeah, I'll show it to you. But I can read it to you. Why don't I read it to you? If I show it to you, I'll lose comments, and I don't like to lose those. I'll read you the Nextbridge. So January 30th, today, Nextbridge announced the following. Nextbridge Hydrocarbons has entered into an agreement with McCabe Petroleum Corporation, a company owned by Nextbridge Chairman and CEO Greg McCabe, to participate in the Imperial Gas Project, a hydrocarbon exploration, production, and expansion project located within a renowned producing field of the western U.S. Rocky Mountain Range. The IGP includes existing gas production, significant recompletion potentials, that's good, multiple PUD locations, that's excellent, and numerous soon-to-be tested sites with promising horizontal drilling activities. So that's a cash flowing deal with probably pretty good upside. I don't know what his terms are. I would guess that he's trading it into you at a fair price, maybe anything from 10 to 25 percent discount to cash flow, maybe. And then maybe he's giving you these locations for free, because I think that's kind of how he sees it. It says multiple. I don't know how many. Don't know how big. Western U.S. Rocky Mountain Range. If it's horizontal, it could be New Mexico. I don't know. I don't think it's the DJ Basin. I suppose it could be, well, let's see if it says. MPC has also agreed to include Nextbridge in an AMI agreement, which includes other possible acquisitions in the same geologic province, all with a similar upside potential. This has led Nextbridge team to engage in advanced discussions with the operator of IGP to incorporate our expertise. Wow, power generation and geothermal drilling, which that could lead to mining or even, data center power, which we believe have the potential to work exceptionally well on both the IGP acreage and the AMI. Doesn't say right where it is. And Nextbridge has engaged our geothermal partner, that's great, and expanded the geographic boundaries of our contract to include both the IGP and the AMI. Data centers, AI data centers, there you go. So they can that's a way of, you can take, I don't know what, for example, I don't know what geothermal is priced at, but if he's horizontally drilling for natural gas, these wells they come on at a pretty strong IP, that's initial production, but then they decline anywhere from 70 to 90% of their production in the first 18 months to 24 months. But that's where you make your money, and you can refrac, or I just don't know the play. You can probably drill other wells in other zones. But if you're bringing your gas out, it used to be in the Rocky Mountains that there was a much lower gas price because there weren't pipelines. I have no idea anymore what the Rocky Mountain natural gas price is, but just pick a number. Say it's $2 right now, $1.50, and then you've got transportation costs. So what building a data center and supplying a data center does, you can sell that gas to that data center under a contract, maybe at $6. I'm making it up, I don't know. But you turn your $2 natural gas maybe into $6 or $8 or $10 natural gas. And that's probably too much. Those are the kind of economics that can happen if you're selling your natural gas to a miner, crypto miner, and you're sharing in the profits. But you could, I don't know, you could double or triple your revenues that way. I don't know his numbers. More importantly, you don't have to pay a lot of transportation costs. So and it becomes a great contract. All right, so it is a premier hydrocarbon producing region, substantial development over the last 2 decades. Based on the techniques perfected in the Permian, Williston, and Appalachian Basin. There's a company that I was trying to get funded. They got all the money they needed, and it's just for this kind of thing. It's like what we're doing. It's software in the cloud, and it turns tier 2, tier 3 reserves into tier 1. Anyway, it got fully funded. I love this. I just don't know where it is. I think it's fantastic. This will add reserves. More importantly, it'll add cash flow, and it sets up. It'll set up growth in reserves, and I bet as he gets to working, he'll pick up other acreage and other projects around it. I think it's fantastic, absolutely fantastic. Western U.S. Rocky Mountain Range. See, I don't know if he means on the west side of the Rockies or on the eastern side of the Rockies. It's in the western, of the western U.S. I don't know, just slightly confusing. Let me just Google name successful hydrocarbon region or play in Rocky Mountains using horizontal drilling with growth over the last 2 years. See if we can find out where it is. The Uinta Basin. I did a deal there. Yeah. The Uinta Basin's very, that's great. And then the Mancos Shale in Utah. Based on recent reports, the most successful hydrocarbon play in the Rocky Mountains over 24-25 with significant horizontal drilling growth, high yield results over the last 2 years is the Uinta Basin, particularly the Mancos Shale and Uteland Buttes play. Once considered a secondary basin, the Uinta has experienced a horizontal boom and is now viewed as a premier unconventional play. We used to own a bunch of acreage there, but it was gosh, I think it was 20 years ago. The basin saw intense M&A activity in 24. SM Energy and Northern Oil and Gas acquiring XL Resources for $2.6 billion. Horizontal output has risen from 9 million barrels a day, so it's oil, to over 125 million barrels a day. Operators are using long lateral drilling, 3 miles or more, and this is what this company, I just couldn't hold the deal open any longer. Anyway, it's gone. Then, it is the DJ Basin, the Denver Julesburg Basin, the Niobrara and Codell. Yeah, maybe he's in the Niobrara, but that's been around a while. It's a top tier producer. Weld County, yeah, I worked with anyway, these are all old deals. The basin continues to see consolidation and improvements. Chevron's there. And then the Williston Basin, I don't know if that's what he's talking about. I don't know. I don't know where the Rockies go, but that's the Bakken and Three Forks. It's a dominant U.S. type play. Chord energy, longer laterals, and consolidation. I think it's the Uinta. That's what I'm going to guess. It could be the DJ Basin. I've got to subscribe to get that. I think it's great news, Adela. Absolutely fantastic news. And it shows how fortunate people are to be aligned with Greg McCabe. RT 2610, yes, sir. Time to CJ Yukon, time to pick some up. It's on sale. Yeah, and it has been. That's the frustrating thing. It's been on sale for a while. But 2502 to 2598. But remember, nothing's changed yet. Some good things have that we can extrapolate. The Telus deal, rail engine. I think it's a huge benefit to us that Railtown doesn't have to go company to company to company to company, which they will do anyway. But in this case, they're just going to be on top of a channel of revenue, which, there's 20 million hookups that TELUS currently has. You got to assume, I would guess, that 80% of them have nothing to do with us. But 20% of that, it's 4 million. I don't know how many of those are enterprises. Let's do it again. Just take 20% of that. Almost a million. Well, 500,000 enterprises. Maybe they're all coming to this data center and running through Railtown. None of that shows up in this price yet. Krabby Ellie, what in the world happened to silver? What happened? I thought you said it was supposed to go to par with gold. When will that happen? Is this a good price to buy silver? I wish I had some. Yes, I think it depends on your goals. I think the biggest reason to buy silver over the last few years was it was the only asset that had not participated in the everything bubble. Every other asset from 1980 onward had made new highs, except for silver. Well, that's gone now. That reason is over. This silver has broken through 52.5. But I don't think it's done. But it's volatile. Silver is a manipulated asset. There's 26 cowboys that traded on the paper markets in London and the CBOE and elsewhere. They base their trading on warehouses having physical silver. Those warehouses last year, 24, I believe they had let me just see, maybe I can find out. How much silver is held in warehouses? warehouses, CBOE and LME. As of early 26, the COMEX, oh my gosh. Oh my gosh. This is pretty scary. It used to be over 800 million, which is 1 year's production. The COMEX, the CME group, has silver inventories of 124 million ounces. The LME, they don't give me a quote, but it used to be, to my memory, not last year, the year before, about 800 million. Well, you can also ask how much silver is produced annually in ounces. I think it's 800 million as well, but let's see. Global silver mine production is approximately 815 to 820 million ounces annually, worldwide. So the inventory, I guess we only saw part of it, but they didn't disclose London, so I doubt it looks good. I bet it's around 100 million to 200 million in the warehouses. Annual production is 800 million. What? And you're going to find, if you get an honest answer, there's not enough silver to meet demand. What is annual demand for silver in ounces? Otherwise, they give it to you in tons with 2 N's and an E. Global annual silver demand, do you want to listen to this, is approximately 1.2 billion ounces. So global demand is 1.2 billion ounces. Global production is 800 million ounces. And it's been this way for about 5 or 6 years, this deficit. And that's why the warehouses have come down to next to nothing. And there's huge rehypothecation of silver. But that demand's not going away. And the thing about silver is it's real. It's not like shares of stock. Industrial demand is 700 million ounces. Production is 800 million ounces a year. Industrial demand is 700 million ounces. How quickly can silver supply from mining increase per year in ounces? Global mined silver supply increases slowly 1 to 2% per year. With 2025 production projected at roughly 813 to 830 million ounces, growth is constrained by long lead times for new mines. With annual increases usually measured in a few million ounces rather than rapid, large-scale supply surges. 2024 global silver mine production rose by 1% to 820 million ounces. Let me ask one more thing. How many paper ounces of silver are traded daily in the futures markets? Okay. Do you have these numbers in your head? The warehouses on the CME are about 100 million, a little more than 100 million ounces. London, they didn't really have a number, so maybe let's say together they have 200 million that they move around by forklift to meet delivery. Annual production is 820 million. Annual demand is 1.2 billion, of which 700 million ounces is industrial use. And the growth in silver production is 1% per year. I'm sure as the price is going up now, that'll increase. So you have a thin margin of error in the warehouses, above ground silver that can be given for delivery. You have production of 800 million, a little more per year. You have demand of 1.2 billion ounces per year, and it's been that way for 4, 5, 6 years. And obviously there's silver in people's attics. There's silver in ETFs, some silver in ETFs. But at these prices, where are you going to get that gap? How are you going to fill that gap between 800 million produced and 1.2 billion demanded? Particularly when the industrial demand is almost equivalent to annual production. Where is it going to come from? Higher prices might bring it out of teeth and out of construction projects, but it's going to be tough. And that's why it might become unobtainable. That's why when you're buying physical, you should just pay whatever price you have to pay. You can rue that we didn't get it at $20 or $25, but such is life, as I'm finding out. Approximately 250 million to over 600 million ounces of silver are traded daily across major exchanges like the COMEX and the London Bullion Market. These are in the form of futures and derivatives contracts. That is low, by the way. They trade in one day what the world produces in a year. COMEX, they say here, daily volumes range between 250 million and 300 million ounces. It's all paper, backed up by a little bit in the warehouse. LBMA, London, over 200 million ounces. Some estimates suggest total daily paper trading, including the over-the-counter, can exceed 600 million ounces. The paper silver to physical silver ratio is estimated at over 250 ounces of paper silver for 1 ounce of physical silver. You talk about leverage. You talk about your rehypothecation. You talk about your banker's bullshit. It's silver. The vast majorities of these contracts are settled in cash rather than through physical delivery. Yeah, but what if? What if too many people stand for delivery? Then it's unobtainable. I don't know what your goal is, Krabby Ellie. When I say that gold and silver are going to go to parity, I certainly don't mean that overnight. And I don't hear anybody else saying it. The more reasonable approach is that silver will go to 1 ounce of gold, 20 ounces of silver in this next cycle. I think it'll go 1 for 1. Or, in fact, silver will be more valuable. But if you use 20 to 1 at 5,000, silver should be $250 an ounce. You can determine for yourself if that's cheap now at 100. If gold were to go to 20,000, I think gold's going to go to 40,000 or 50,000 before it makes its run for just preserving wealth. But if you use 40,000, that's a target from old calculations that Dr. Stephen Lieb comes up with. Even Jim Rickards has that out on a parameter. On the other hand, making these projections, you've got to, that's why we're going to war, I think, is to get gold maybe, but also to get the oil of Iran, Venezuela, the Caribbean. I wouldn't want to be Mexico. And they're trying to do it with Russia too. Get it into the Western system to save the banks. But, pick one of those, $40,000 an ounce. And if 1 ounce of gold is equal to 20 ounces of silver, right now it's around 80. It was 120, that ratio. So yes, silver's still cheap as compared to gold. Silver's going to 2,000 an ounce. So you can determine whether you think it's cheap. If you want to bring alarm and say things like, what in the world happened? You shouldn't buy it. If you can't stand that volatility, you shouldn't own silver. But if you want to protect your wealth and your standing in the world, you should own silver. It is volatile. But I think 2,000. It'll easily go to 2,000. And you're going to say you're going to want it overnight. It's not going to happen overnight. And Railtown is down today. I just don't get how it can ever run, or when, if it just hangs out in the 20s for so long. Okay. So you're making your prediction for Railtown based solely on the fact that the price has been in the 20s for so long. It's actually been in the 25 to 30 range for about 8 weeks. But okay, you call that so long. That's all the data you need. That's how you make your decisions to invest. I think that's just gambling. And it's a non sequitur. It's meaningless. I hope it never matters. But according to Tom Ronk's data, which I don't know if it's reliable, in the United States alone, there's 50 to 60 million shares of Railtown sold under the reg show exemption, short, without locating it. Now, we don't know if any of that's settled, moved offshore. But every day, these guys spoof, cross trades. They use computers and computer programs to sell stock that doesn't exist. But they may cross it later in the day, and so they can report to the regulators, hey, we were net neutral. But during the day and in swing trades, Railtown has been met with constant selling of shares that are not located and never delivered. And it's done with the permission of the regulators, with the lying and misrepresentation by attorneys. It's done with automatic computer program selling. And it's done on a scale that's made a lot of money for people. In face of that, since February 8th, Railtown, at least on the face of it, Railtown entered into an agreement to acquire AIP, an MOU, LOI, Canaccord Genuity, negotiate weeks. I'm not going to go through the scenarios, but suffice it to say that the computers who do this automatic computer program selling, they read all those headlines. For a year, they've been selling. Now, the buying that we've done, which is primarily in the United States, I haven't seen anyone tell me that they were actually able to buy at the ask. Yes, we must have some effect on demand for the stock, but our stock is held in the brokerage accounts as a security entitlement. It might just be hypothecated stock. We may be buying nothing, and almost surely are buying nothing, because none of the insiders are selling. In our brokerage account, for example, mine, Morgan Stanley, up at DTC, they're going to have a block of stock. and they're going to lend it out to the shorts. And they put in my account a securities entitlement. So over the last year, probably more than 50 million shares, when you combine Canada, have been sold into existence. Maybe some is crossed, maybe some is arbitrage, but every day, just constant heaviness. What you own and I own in our accounts is just a chit. For a year, the company has its insiders and many of its institutional investors and perhaps bankers or brokerage firms or venture capital firms who talked with Canaccord Genuity as all of this has been happening, who were precluded for buying. So if you think that the 20, as you call it, 20s, if you think it's telling you something, then go find another stock. Good luck. I don't think it's telling you anything. I think the stock is mispriced. And that it's going to have a day or two or a week or a month of catch up that's going to reward people. But if you're so limited in your analysis of stock investments by only looking at the price, you're a day trader. Good luck. Crabielli, can you talk about silver? Do you think it's a good investment worth getting into, and what are the future prices? I've been calling, you can't read it here. I took this from my last place. But I've been calling for $120 silver since silver was about 25 bucks. I now think silver, and I've been saying that for a few months, silver might go to 150. But that's in an environment where I think the Dow goes to 70,000, S&P goes to 10,000, NASDAQ goes to 40,000, and the Russell might go to 4,500, even 5,000. In other words, a blow off top in a 45-year bull market. Once that happens, and look, you're seeing stresses at OpenAI, you're seeing stresses at, I guess, at Microsoft, but you're seeing stresses in the home market. Your companies like Disney have gone woke and gone broke. They've wasted money buying male-dominated idea companies, Marvel and Star Wars, and turned them into an excuse to propagandize about how women are better at everything than men. Well, it's just not a great way. Number one, it doesn't make any sense that 130-pound woman can take down 6 huge aliens or whatever. But it also, it's not a way to attract a male audience, so they're going broke. You're seeing stress there. You're seeing stress in restaurants. So the economy could break down at any time, and that could be reflected in the banking system. One place it is starting to show up is in private equity, but not all private equity. And in the face of all that, there's this huge bull market going on in robotics and AI and space, all this. So nobody can really figure out exactly what's going to happen. But I think if the market gives a blow off top and the economy busts, you're going to see all of these. My opinion, when the market hits a high and corrects, I think it's going to go down 95% in the panic. I saw one gentleman frame that as unrelated to my thoughts, by the way. I didn't read it before I made my projection. He said that maybe it'll go to 95% down compared to gold. But I think, David Hunter is saying it's going to go down 80%. I just think it's going to be, none of you don't have a framework to deal with it. The panic is going to be unbelievable. Absolutely unbelievable. Everything's going to be for sale. So I think it's going to be devastating. Now, using David Hunter's time frame, which I'm not sure I agree with, he thinks the global economic bust will be this year, later this year. And that's when the markets will follow suit. I'm not 100% convinced because we still haven't had the blow off rally. When the markets start going to the moon, everybody's going to be buying, day trading's going to work, everyone's going to be, this time's different. Maybe Trump's not as bad as we thought. Putin, whatever the storyline is to justify it. But when the correction comes, to get to your question, if silver's gotten to 150, and it might go higher, I think it's going to correct in that sell-off to where it broke out, 52.5. Maybe it gets into the high 40s. Now, David Hunter, last time I listened to him, he changes, but he said it could get into, back to $28, $32 a share. I don't agree with him. Now that it's broken out, I think it'll come down, try to puncture 52.5 again. That'll be your last chance, if you have cash, to buy silver at those prices. It'll never happen again in the generation. Should you not buy silver today and try to buy it after the crash? That's a tough call. Because if you don't have a stomach for it, if you pay $100 for silver now, you could have paid 20 or 25 just 8 months ago. You might make 50% profits without selling. It could go higher. But if it pulls back in a crash, you could lose half your money or more. And if you don't have a stomach for that, that's not going to be fun. But as long as you don't sell, you're not going to lose money. And in this transition of time, I don't know how long it's going to take. I would guess it's going to take to the end of the decade, but it could be much, much sooner. you will stop measuring your wealth in dollars. You'll measure it in ounces or oil, barrels of oil, or other hard assets. I think the only asset that will protect you from penury and having to start over after this big financial transition is silver. Gold, silver's gone up 4 or 5 times depending on where you got into it. So it's not as cheap as it used to be. There's a place, gold is less volatile. Platinum, palladium, copper, but I still think silver. Yes, I think you should. If you don't own it, you just got to close your eyes and buy it for whatever price it's available. I'm trying to address the volatility of it. If you can ignore that volatility and buy it at 100, buy it at 150, buy it at $200 an ounce, yes, it may pull back to 100. But silver also at some point, if you didn't just hear those numbers I gave you, I just Googled them. I have them in my memory, but I just Googled them in front of you. The world produces a little over 800 million ounces of silver a year. It grows by 1%. I'm sure it'll start accelerating a little bit. Demand is 1.2 billion ounces, which is probably medical, jewelry, investment, and industrial. Well, industrial 700 million last year. That's not much of a gap. And then there's gigantic short positions at the banks. So there could become a time where silver's unobtainable. And I don't have a position. I wanted to build one, but I think the way to get into the metals now may be by miners. That's what'll start moving now. But yeah, I'd say that silver is still going to go to 120, 150. Could be higher. At any time, if there's panic in the silver market, it could go to $1,000 every day, limit up. I think the banks and the Fed and the government, the war machine, are going to suppress it. So I don't think we're at that point yet, but we're pretty darn close. Panic it's what starts panic. But if you're a day trader and all that, I don't know. I don't know what to tell you. But if you're trying to build wealth and protect wealth, you just got to buy silver at whatever price. Mom from Home Alone. Oh, that's who she was? Louis Shotland. Did you talk about Railtown full year earning report? No, I didn't. I didn't see it, but I wasn't specifically looking for it, but I did look for news. I didn't see any. Let's see what they say. I think I had predicted they might do 200,000 in revenue. I don't remember. But let's see what it says. I don't see any filing here. Ah, there is one. There's two. I didn't scroll down enough. They have 1, 2, 3, 4, 5, 6 announcements yesterday or 2 days ago. So Crow put out their audit. Let's see what it says. Okay, they've audited. All right, let's look at the numbers. Current assets. I wish I'd seen this. I'll try to, Lewis, I'll try to print them, picture them so we can talk about them tomorrow. But I can tell you the current assets this year versus last year dropped. Darn it. It's hard to read. It dropped by about 800,000. I can't. It's very hard to scroll. Damn it. Let me see if I can do it this way. They have current liabilities. They went down as well, 200,000. Expenses, they paid consulting fees, 800,000. None of it's going to me. Salaries, 1.6 million. Professional fees, 580,000. I guess that's attorneys, etc. The shares outstanding, basic and diluted, 138 million. So they have a diluted loss per share of 4 cents. Net loss for the year, 5.4 million. But they have some non-cash items. They used 4.3 million in operating activities. They raised some money. They say the balance of shares end of September is 143 million. I guess that's before the AIP deal. Railtown incorporated in British Columbia in 2011. These have been prepared on a going concern basis, which assumes that the company will be able to realize its assets and discharge its liabilities in the normal course of business for the future. As of September 30, the company is not able to finance day-to-day activities through operations and incurs losses. The company is in the business of research and development that by its nature involves risk, high degree of risk. There can be no assurance that the company's business and strategy will enable it to become profitable or sustain profitability in future periods. I'm not going to read more of that. That's boilerplate, but just because it's in every small company doesn't mean you shouldn't pay attention to it. It is a risk. On November 16th, 2022, the company closed a convertible debenture financing by way of a non-brokered private placement for almost $600,000, $1,000 per unit, one note maturing in 36 months at 10%, convertible into common at a specific price, 15 cents. So it's not toxic. It's not going to screw with the denominator. Their salaries are $515,000. Talk about the options and the warrants. They do have they talk about the vesting of some of their employee options. They disclosed the warrants, which I've shown you before, but there were November warrants at 30 cents. They probably didn't get exercised, unless that's Canadian. That's Canadian. They might have been. January warrants, US 42 cents. They probably didn't get exercised. 3.5 million shares. So that reduces the number of fully diluted shares. February 28th, 15th. Anyway, it looks like they have Canadian warrants maturing in February. And I would think they'd all get exercised. It'll probably bring in I don't know, a couple of million, $2.5 million. For the year ended September 30, they had a net loss before taxes of $5,378,000. Last year it was $7 million. And they do have a footnote on the AIP acquisition. So I don't know. I don't think I don't think any of that is surprising. I didn't find the revenue though. So let me look again. Okay, so management certification was filed for Class 1 and Class 3B reporting issuers. It's very hard to read, darn it. They give the prices. All right, that doesn't really do much. Try this one. It doesn't tell us anything. I don't know. There's, oh, here. Okay, so let me read this. Maybe there's a management discussion here. This management discussion and analysis has been prepared as of January 28th. I think I already read this to you from the monthly update, but let's see what it says. They give a forward-looking statement. They have a going concern clause. If you need to hear about that, tune in to Tony. I mean, it's a valid concern with all these companies. Okay. The company operates two business units, Railtown and AIP. Railtown provides the frameworks, orchestration, and observability required to build scalable and reliable enterprise-grade agents and agent solutions. As organizations increasingly rely on large language models and AI agents to perform complex tasks, Railtown bridges the critical gap between model capability and real-world execution. The company's platform empowers development teams to build intelligent agents that are explainable, observable, cost-controlled, and production-ready, delivering trust, performance, and accountability at scale. Railtown's platform is designed with three interacting products: RailTracks, which enables construction of the agent; Rail Engine, which ingests data; and Conductor, which provides observability of the agent. Together with these technologies form a complete enterprise-grade stack for agentic AI development. AIP has created an affiliate network comprising over 180 AI companies, delivering solutions across a broad spectrum of industries, including healthcare, manufacturing, fintech, and telecommunications. The network brings together innovators, solution providers, and niche specialists, creating a vibrant ecosystem of AI expertise and applied technology. Railtown's acquisition of AIP allows the company to extend the reach and utility of its core agentic AI platform. By integrating Railtown's stack with AIP's affiliate network, AIP is expected to become a launchpad for an agent publishing marketplace, enabling network members to build and deploy agentic AI solutions faster, leveraging Railtown's ADK, ingestion engine, and observability platform. That's Railtracks, Rail Engine, and Conductor. They're going to allow the network to reach new customers through a centralized marketplace, connecting AI solutions to enterprises that require pre-vetted, product-ready, production-ready agents. They'll allow it to monetize the network, monetize AI innovations efficiently, turning proprietary models, workflows, or connectors into deployable agent products. It will also allow the network to collaborate across industries, combining domain-specific knowledge with advanced AI orchestration to deliver sophisticated multi-agent solutions. They have, at the end of September, $400,000, almost $500,000. They talk a bit about the AIP shares, and then consulting fees of $800,000. It's a lot of fees. They have investor relations fee of $300,000. It's a lot of fees. Marketing and promotion, $400,000. A lot of fees. Professional fees, $500,000. Office expenses, $200,000. Product development, $100,000. So they're spending their money on everything but product development. I don't think, on the face of it, I don't think that's particularly great. But I don't know the situation. Right, revenue for September 30, nothing. So I guess my prediction was for the first quarter of their year. So we're not seeing those numbers yet. So they haven't done any revenue. It looks like they'll bring in, I can figure it out. I can probably figure it out for you. Approximately in February. I'm going to include March 1 as well. But it's not very much for March 1. This is in Canada, so I think it'll happen. So this, just so you know, Louis, this is their fourth quarter and their year end. I think that's what they're saying here. Anyway, let me just quickly figure out. So, darn it. Okay. All right. I'm just trying to figure out how much money is going to come in the next approximately 30 days without changing, without expanding the fully diluted number of shares. So, but it's at low prices, so it's not going to be a huge amount of money, but it's enough to keep them away from the toxic financiers while they wait for revenues to start. And I think revenues will be monthly once it starts. Okay. So if everybody exercises, they'll bring in over the next sort of 30 days, they'll bring in $1,959,585. And that should be plenty for I mean their cash spend, I guess, last year was under 5 million. So they should be all right. I don't see anything else on this filing that really teaches you or tells you anything. I read the audited financial management discussion, which is, what's the certification? No. Yeah, I don't see anything new there. Anything unexpected. It's a startup company. It's an R&D company. It's a company that has developed a product, and they were marketing their product 2 years ago when they ran into, or year and a half, whatever it is, when they ran into AIP Partners and they joined it. And then February 8th, they agreed to buy AIP Partners. And they've been, it appears with the information we have that they've been focused on closing that deal, which was a nightmare to close, I guess. And they've finished their work on Rail Engine. And they've negotiated something with TELUS. We had some holiday periods in there, the summer and Christmas, or whatever, the year-end holidays. But this filing talks about revenues through the end of September. I have a feeling there are revenues in their first quarter, we haven't seen those numbers yet, but they're not going to be significant. Look, it's the same story. Well, actually, it's different over the last 3 months once the TELUS news was announced. But it's a startup, it's an R&D, it's a technology company, and they have no revenues until they start selling their product. It looks like when we read what we read yesterday, it looks like with that deal they have with Uniserve, that they're going to give their products, trying to remember where we read that, but they're going to, at least in that situation, they're going to give their platform for free, which leads me to believe they don't want to double dip. They're going to get the revenue from the TELUS, but it hasn't happened yet. So we're constantly having to wait. And I think it's about to end. I think you're going to see, here's the steps. Railtown and or TELUS and or somebody else that we don't know about has to disclose enough information that it allows research to be published. It allows institutions to start buying Railtown if they want to. We need that. Secondly, we need that announcement, whatever that news is, to be implemented. My guess is it's going to be that the TELUS data center is going to go to a hard open, and it's going to start attracting the customers that Darren Entwistle, CEO of TELUS, wants them to, going into a rapid growth from essentially next to nothing to $2 billion in revenues, and maybe it's not that much, maybe it's $1 billion over the next 2 years. And then Dr. Tom Core and the AI partners have to move 125 companies spend over to the data center. And then I guess Corey's got to be marketing, always marketing. And the engineers have to make sure everything works. I guess that's where we are. But the key is we need to break the blockage on disclosure, 1. 2, whatever is going to happen should start soon, we hope, and start showing revenues immediately and the growth of the revenues, proof of concept. And 3, you get research and buying from institutions and from retail. And, it's starting to look like my optimism that there would be a unsolicited bid for the company happening in the first 1 or 2 quarters might be that. It might be optimistic. But right now we just don't know anything. I just keep going over the same thing over and over again, and we get nowhere. I can't use the word quiet period because that's not the right word. But we are essentially in a blackout of projections and talking about revenue, and so we're trying to do it ourselves. But that September 30th financial report doesn't really tell us anything we hadn't been seeing all along. The company loses money, about 4 cents a share. It pays a lot of money to consultants. The salaries aren't particularly high. And they did some financings, but the number of shares outstanding is known and is knowable, so that's good. They mentioned the AIP deal. None of it's new stuff. It doesn't have any impact. Of course, the stock's down, so you're gonna, I'm not picking on you, it's just normal. You're gonna assume that it's bad, but the heaviness just goes on and on and on and on, and it has absolutely nothing to do with the story. Now, there is a train of thought that if things were good, that buyers would come in anyway and break securities laws just like the sellers do. I don't know. Somebody just simply had to sell 4,000 shares today at 25.1. Just had to get out. It's all manipulated. So I'm sorry that's going on. I really am, but I don't know how to change it. Railtown closed at 25.7. Finger closed down a penny at 126. GDC 421. MTEN 2.02. ZJYL 0.1375. Hi, Ward. Good afternoon, William and RT crew. After watching John Ruffalo yesterday, a question came to mind. Could Railtown be going to space data centers? Because he went and saw it, didn't he? Answer it would be the next logical step if they're chasing sovereign AI edge. And see, we don't know this yet. This is my belief, but we don't know it yet. I think this thing they've invented is ahead of the rest of the market and solves a problem. And it is a huge benefit in terms of reducing costs, increasing efficiency, increasing output, limiting the amount of compute time necessary to run the applications. It makes money for the users. And I think it's the only one doing it. There will be others. I don't think LangChain is in the league with them. But again, there's no research. There's no news that fully describes any of this. So we're always in this rolling period of not really having a breakthrough. So you can see the price go up and you go, it's working. But I'm trying to separate without being foolish and acknowledging that sometimes, almost always, price tells you something. But in this case, this is a case where program computers automatically sold stock when they saw an MOU a year ago. And those players have been selling ever since. And daily they mine the stock downward. It's just mining at 0.000000 something, and then a little bit of a spread. They keep the pressure down. It's always red. And my information was wrong that AIP had closing that would have anything. And I don't have access to information more. If you guys want to get direct information from the company, I'd watch Tony. But I think with the corporate presentation, the interview with Dr. Tom Core, with the filings with the CSE, which I did read to you, and the one that we just went over, it's the same information. But anyway, I appreciate that you showed it to me. We can piece together what's going on. However, nothing is coming out black and white and saying this stock is worth $2 right now. This stock is worth $5 right now, and we expect it to grow. And so everyone's hesitant. They see it in the red, and I get it. I do get it. And it's gone on far too long. I've missed building a position in silver, building a position, closing a oil and gas deal, locking down 3 other transactions. It's all gone. It's all gone. And I'm left with this endless, unsophisticated market. Not you guys. This market for Railtown, there's nothing. It's just crap. But we got to address it every day. And what was the volume? 80,000. Anyway, I do think you're right, Ward. I think that's a pretty, now that you mention it, it's pretty obvious. But like all things, until they're pointed out, they're not that obvious. That's a good call. Microsoft Inc.'s $750 million 3-year deal with Perplexity to use Azure cloud service. So that's good news. By the way, Ward says, there is a huge sale on cash cows today. Stock up while you can. Exactly. Instead of going, ouch, I think it should be, wow, I can still buy, But of course, to me, I can't, I'm in the audience. Hey, Neil, the CSE closed 500,000 shares today. That's pretty amazing. Neil says, combined with the ATS, 742,000 shares. It can't go on forever. If research comes out, if buying comes in, all you need is John Ruffalo's company, Mavericks, and they just raised $500,000 in Mavericks too, to buy 5% of the company, and we're not talking about 25 cents anymore. But we are talking about it as long as they can keep selling non-located shares. They can mark their tickets long when they're really short. They can spoof, cross, move stock from one trader to the other, communicate selling the same amount of stock every single day. They just walk it down. And we sit and look at it, even though we understand it, when we go, ouch, there's something wrong with the company. The only thing that can be wrong with the company in this situation is if they take a deal from Ari Rubenstein. They take a deal from Jeff Easton. They take a deal from Ionic Ventures. They take a deal from the Kramers. But they're not going to. I just showed you they're going to bring 2 million in the next 30 days, roughly. If they did toxic deals, that's the final trap that the criminals do, so that the number of shares becomes impossible to know. And then there's all this phantom shares in the float. That's not happening here. What is happening is this endless delay. I would break it down to probably 3 things. When they met AIP, obviously that was a great business strategy. They only paid 20 or 25 million, depending on what calculation you make. The annual revenue from the data center, annual revenue that Railtown will get attributable to that network, is about 20 or 25 million a year. So it's a hell of a deal. I think a college professor, I'm sure he's smart, he's got a great accomplishments in his career, but he was running the company. It took a long, he's listening to these great attorneys and regulators, and I'm sure the regulators aren't working with the shorts, and I'm sure the attorneys aren't either. But it just dragged out forever. So that's one delay. Another possible delay is that behind the scenes, possibly AIP, John Ruffalo maybe, introduced Railtown to TELUS, to Entwistle. So that you see how quickly they roll. Everything TELUS does moves at the speed of the Politburo. It's like everything's a 5-year plan, and you got to make sure there's enough soap in all the men's rooms and women's rooms before you actually start making your calls to your clients or whatever. It's the priorities seem to be stretching things out, but that's fine. I mean, we can't change that. But I'd say AIP delayed revenues and delayed news and discussion, but I think it's good. That network's doing 400 million in revenue. They have a roll-up strategy. I think that asset is valuable and it pays for itself. But it took a hell of a long time. I think when you have a professor run a company, things take a long time. But it got done, and it got done under budget. That's one. Secondly, TELUS. Turns out they were working on an amalgamation. No, the amalgamation was with another company called Detroit or something, and Railtown, and AIP. I can't remember. But anyway, the TELUS deal, I bet, took a while, but it looks like it's locked up. So I think that's the second delay, and I think that may be the ongoing delay. But the third thing looks to be Rail Engine. They started 6 years ago. There seem to be a lot of different iterations or names of these things, but I think they settled on the name Roadhouse. And then someone pointed out that they're actually in the rail level of application, not road. I don't know. Anyway, so they narrowed it down to 3. Rail tracks, which I think's been ready all along. Conductor, which may have needed some adjusting, but I think this Rail Engine turned out to take a little longer, and no one knew it or pointed it out. Well, all 3 of those delays are over with. They're all over with. We know. How do we know that? Filings. Some of the things the company started to say. News announcements. So we know all of those items are finished, except for one. We know the TELUS arrangement is finished. We know the Rail Engine is finished. And we know the AIP deal is finished. But the one thing we don't know, and frankly, we don't know for sure if it's related to TELUS or maybe SpaceX is signing a deal. We just don't know. But there's something holding up research and buying. Now, I can hear the skeptics say, well, people might not buy any. Well, that's right. I'm not saying that when people see the information, they'll buy. I think they will. What I'm talking about is if people who know the story right now and are close to the story and have been, know the story, want to buy, they can't buy unless they want to break the law. And then people, other institutions in Canada and certainly in the United States, they don't know it at all. but if your research analysts and your bankers like Canaccord can't tell the story right now, well, they're not hearing the story. So I'd argue once they hear it and study it and know it, then they can buy it. But right now, that's the last little shove that we need to start confirming some of our suspicions, which are good. And in the meantime, I think the stock is priced at about 1x of the revenue, just the network will move from their current spend on other hyperscalers. That network's going to move to the TELUS data center. Just the split on just what Dr. Tom Core talked about is enough, well, number one, to pay for the acquisition of AIP in 1 year. But it's about 12 cents a share before it grows just at 125 companies. Call it 12.5 cents just for arithmetic ease. You're getting half of what you're paying back. You're paying 25 cents. Again, simplistic. You're getting half of that back a year just from the networks moving its own current spending from other hyperscalers to TELUS. So the stock right now is priced at 2 times 100% margin revenue. Not quite as good as Finger Motion, which I would argue Finger's at almost 3 times, but Finger doesn't make money. But anyway. All right, let me keep going. APS 71. Neil Grondick. Complete chit show, chitty chitty bang bang in markets today and Railtown. Yeah, I think there's a lot of antsiness around the AI, so-called AI bubble. And I'll tell you, I don't know technology that well, but I think there's people out there, smart people, physicists and otherwise, who say large language models are a dead end. That's a risk. I'm reading things and seeing things that OpenAI, Sam Altman, is in total trouble. That's a risk. I showed you a piece about how the whole decentralized versus centralized AI model, the data centers, the centralized data centers versus the decentralized GPUs in every Apple product, that 2 different visions. Which one's going to work? Which one's going to prevail? So there's, and then the high valuations. There's a lot of reason for skitterishness. And so anything like a Microsoft sell-off is going to make everybody pull back on their bets. And in our case, no one's betting on Railtown other than insiders and ourselves. But you don't have Fidelity AI Fund trading Railtown. You don't have some institutional pool that's going to cut back on Railtown based on Microsoft's earnings. You don't have any of that. Well, you do have no research, no trading desk, no enforcement of locate laws or deliver laws, and you have an industrial scale shorting, colluding complex that includes attorneys, so-called market makers, regulators, prime brokers, somebody in there, some compliance or whatever, they're all in on it. And it never ends. And it hasn't ended. And just because I bring you a stock doesn't mean it's going to end. And so we've watched collectively. I think we brought the stock up to maybe a little bit overpriced. I don't know, but certainly a price that was reasonable based on what the company we believe is going to do. I think the prices we were paying were less, even when we paid the highs, than what a private equity group would be marking this up at. But no news came that led to buying. Everything was delayed. And the heaviness just keeps every day. And they've taken it from 70 cents on the ask down to 26 cents on the ask. And the company talks to the shorts, in my opinion, via people on Twitter, but I could be wrong, of course. Everyone here says I'm childish to say it. I'm just trying to perceive threats, that's all. So they don't know any better than most that the system is a group of men, probably about 50 in total, 100 at the most, who have bastardized securities laws. They've pushed the boundaries every year. They've changed the rules. They've put precedent into settlement and filings. They intimidate the SEC, intimidate boards. They charm. And it just goes on and on and on. Yet every time we look at a stock, we expect somehow it's going to be different. It's not going to be different until there's a policy change. And I don't see a policy change. So what's going to happen to make Railtown different? I think number one, whatever needs to be announced will be announced. Number two, I think TELUS is going to have a hard open on its data center. Number three, I think Railtown is the piece between the user and the computing power at the data center. So they'll come for half price, NVIDIA, Sovereign, Canada, data factory, and they'll stay for Railtown's superiority. That's my opinion. That's three. Four, we need to see rapid acceptance, not only of the data center, but of Railtown. I believe Railtown's it on the screen when they go through. Doesn't mean they have to choose it, I suppose. But we don't know that for sure. All these unknowables. But I do know this. NVIDIA chips, HPE, and TELUS can scale from 0 to 10,000 enterprises to 1 million in a day, in an hour, and in a click of a button. And you know what? Railtown's built to do that too. I doubt Langchain is, but I don't know that. It doesn't matter. There's a big enough market for both. So number four, we need to see the scaling of acceptance. What does that lead to? Revenues, revenue projections give some valuation potential. But secondly, the scaling leads to proof of concept. And if this is a breakthrough and a must-have, you're going to see, I think, buying of it just to keep it away from your competitor and buying to jumpstart your own work. So we need to see proof of concept. And I think it's huge to be on top of a data center. If it works there, I forget how many data centers are in the world, but I think Microsoft has over 400. So we'll get there. But you're right, Neil. It's been a shitty day. Neil says complete shit show in markets today. Some warrants expire February 6th next week. So maybe some selling with that small overhang. That's interesting. I just wrote that down. And you're right. There's 5,585,500 warrants. I didn't put the date, but I think those are the ones you're talking about. That's a good point. Maybe they're selling to raise money to buy that. Could be. Could be. RBC with the big boys buys all day long. Ward Richardson, I see Telus and Starlink have a mutual partnership. They both date Amber Heard. That's interesting. Let's see if we can find that. I better write that down. I'll forget that one. It's amazing. That's amazing, Ward. Pat M. opened a new Roth at Schwab since my other account won't let me buy $100. Bought $3,500. Bravo. Pat M. Wow. You guys are amazing. You're like Djokovic. You're professional and you keep coming. They're not going to know what hit them. Silver skyrocket. Hey, Red Pepper. Justin, if shareholders are given a buy offer to vote on, will Corey B give us his thoughts and some kind of reasoning? Yes, I think so. I'm going to show you one, AI generated model, which just because a computer comes up with a model doesn't mean it's gospel. On the other hand, sometimes interpretation of gospel isn't gospel. But I can't settle on a number, really, Justin. I do believe my $55 target of a buyout or better, based on revenues and multiples and more than one buyer, is possible. But to get that now, because remember, I was saying that a few months ago. Well, nothing has really shown up yet. So either things just rapidly, it's like turning on a switch and all of a sudden revenues are 100 million, predictable revenues, projectable, or it's going to take more time. And so I've been thinking about that a bit. These higher targets might now be, sort of 9 months from now or something, if Railtown stays independent that long. So I'm kind of discouraged by that in a way, but it's like, who sent me that? I forget. Excellent research, like Google bought something and somebody else bought something, and Microsoft paid something for GitHub, and now GitHub is worth all this. I think that $55 a share might come inside of somebody else's belly. So it's not bad, but I don't think we'll necessarily get all of that magnitude in our portfolios if it's a behemoth that buys us. Because what are those stocks going to do? Double? Anyway, I don't know how to process all that. So I've turned a little bit cautious on expecting some whiz bang bidding war that leads to such. But I'm not saying it won't happen either. So anyway, so then I start thinking about who's going to buy it, and I think I can show you some, and Ward always helps me out. But to go to your question, if a Microsoft, for example, sees the demand increase for Azure or sees Starlink, I don't know, you can put it behind the scenes stuff going on, and they call up Corey and say, look, we want to buy your company. We'll pay you $1.50. Corey's probably going to say, well, that's it. I can't go to my shareholders. If you add $25 a share to it, well, not $25, 25 cents a share to it, or 50 cents a share in cash, I'll show it to them. So you have a $2 offer. Well, if Corey shows it to us exclusively and he signs something that he can't listen to other offers, that'd be stupid. So I don't think he'd do it. Corey would send us a letter and he'd say management agrees with this, and maybe, have an interview with Tony so Tony can tell you what Tony thinks about it. But I mean, I'd be willing to have, question and answer if the boo birds aren't included. But with him, I mean, but Justin, I come down, I still believe somebody's going to try to buy Railtown quickly. I still believe that. What I'm concerned about is I don't think the price is going to, I think a lot of that price action is going to happen inside the new company. So I just don't know what target to give in that buyout. I'll show you some examples there, but just to be rough, I think Langchain's 1.25 billion is a minimum. I do think Microsoft will try to buy Railtown for less than that. And I think people will say, hey, sounds great. We don't know the mood of people who've been working for 6 years and want an exit. But for me, I think Langchain is the minimum. So just use 200 million shares. It's very rough. Use 1.2 billion, not 1.25. That's $6 a share. To me, that's where the stock's going to go, $6 a share. And I don't think the buyout will be for less than that. Could it? Sure, Justin. Maybe a young executive at Microsoft wants to make her bones and says, we'll pay $400 million. So we might have to face that, but I think there's going to be a bidding war. I think I think I can name several companies that would be interested, but the key predicate is that Railtown has something. And my understanding is they started with their IP first. They've done this before. They made that rock solid. And so I think somebody's going to want to buy that. So anyway, I think $6 might be the minimum buyout. And then going higher than that, I have a little bit of a hard time getting higher. I think Langchain now is probably worth 2 to 2.5 billion, you know, in the minds of these private equity people. So that's $10 a share. I just, as much as I'd love to see a $6 billion or $11 billion buyout, to make that projection over the next, say, 90 days as a unsolicited buyout offer, or the next, you know, 6 months, I don't know. So I get confused, Justin. I would say that a buyout would be $10, give or take $5. Give or, on the downside, take away $4. On the upside, maybe add $10. So I guess a buyout offer to me in the short run could be anywhere from $6 to $20. I'd much rather that the revenues ramp up quickly, there's a bidding war, and maybe it gets bought out at, you know, 10 billion or something. CJ Yukon, I hit 70,000 today. Yay. Good, congratulations. Frank McLean. Great new video today about MMTOP. Large phalanx of culprits being named, now feeling good. Where's that video? I'll try to find it. Thank you, Frank. Justin Babish. I feel like when they book revenue, it's going to fly, and before that, it's not. Yeah, I think there's a bit of an on and off switch to it. I agree with you, Justin. Because we just keep talking in circles because there's no evidence. So we just keep talking in circles, and the heaviness keeps suppressing. And then reasonable people say, well, if it's so great, and they're reasonable, why isn't it going up? Why they should be buying? But, you know, so it is normal, I think. But I agree with you. Once that data center is turned on and people say, well, it is already open for business. I get that. But I'm just not really sure that it's really being, I don't think Phyllis Richmond has come by and written her article that the with her fat fingers that the you know, the scallops d'orange are to die for, and the dessert chocolate souffle is the best on the East Coast, and so the whole thing's sold out. I don't think that's happened yet. But I think it will. So I agree with you. Justin Babish, but we do know the revenue is going to come from, and it's right around the corner. Yes. On the network groups, we know that. We don't know how long it'll take to move everybody. However, that's not That's not actually the correct approach, because what matters is what research analysts and what investment bankers and VCs will see from the data. They will be willing to take future projections of revenue as long as it's, you know, in the near cycle, and value the company based on that. But yeah, we know about that revenue. We don't know for sure about how much of the data center revenue will course through the books of Railtown. I try to risk it at 50%, but that I might be being too optimistic. We don't know that. But you're right, that part will come, and I think we will see, it'll either be a big bomb or it'll be ramping up, and it'll get its own press coverage. And then what'll happen is investors, professional investors, will say, hey, that's great for TELUS, that's great for the data center, but how can I make money on that? And they'll be on the calls, they'll look into public information, or they'll call into the company, and they'll find out that NVIDIA and HPE are down below. Well, they're probably already on that. They might find out that it's Anthropic or it's Cohere. Oh, let me look. So what are the revenue? And they might establish a position in Cohere. They might look at the AIP group of companies. None of them are public, but try to get an idea of which one of those companies are going to benefit. Maybe that might be too much work, and it might be private information. But they may find out that Railtown is getting this revenue, and Railtown is this orchestration framework layer for this data center and the next three. And they're in negotiations maybe with Rogers and Bell Canada, and people start buying Railtown on that. But so far, it's just silence. Not totally silence. I think what Corey posts recently been very interesting. He's wanting to tell you. I think AIP had put out a couple of good posts. So, you know, I think we're making movement. Justin, as of today, I have 70,000. Wow, Justin, good for you. I think holding it for a year is a great idea. Or like Tony says, 2 years. But what I don't think is a great idea is waiting to buy it, because this dislocation or this disassociation between what I think is pretty good evidence of what the company should be worth and where it's trading, I think that difference, what do they call it in overpaid wanking land? The delta, I think is going to snap shut like a turtle, like a, you know, snapping turtle. If we see $40, I'll have 4 million. I've been pouring my whole life. I can't ask for, been poor my whole life. I can't ask for more than that. So let's go with that, Justin. If it goes to 40, you'll have 4 million. If the buyout happens, let's say Microsoft comes in, and I think that number would be $10 billion. And Microsoft has purchased plenty of companies, and so have others at 10, 15, 20 billion. But I think right around 10, 11 billion, that would be that. And it's possible. But another way it could happen is Microsoft buys Railtown at $15 and you get stock in Microsoft, and then Microsoft doubles over the next few years. That might be one way. But it also could be another company could buy it. Who knows? I also think there's a possibility, Justin, that if Microsoft were or somebody were to buy Railtown for its data center piece, they might look at it and say, what the hell do we need this network for? We don't have the, I'm going to have to put HR on them and make sure that there's enough women working there and that there's not too many white straight men working there. And we've got to make sure the environmental regulations are met and the government's issues use people's pronouns other than he and she, and that there's safe spaces in those offices and, that kind of thing. And Microsoft might say, we don't want any deal with that. So I think you might also get, at least it's a possibility. I think Constellation Software will want to buy Railtown, but I don't know. They like to buy things at a discount, so I don't know how quickly they'll drop out. But a compromise might be take the network. And I think they pay for it. So you might end up with shares there. So I agree with you because I do it myself with my poultry account, but I think we should adjust our thinking a little bit. Although I don't know this either. I really don't. But I think we should adjust our thinking that maybe a buyout comes in the $10, $12.5, $15 range. And then maybe we get, in your scenario, we get the rest of that move in the new stock. I hope not. I hope it comes right away in the buyout, but it'll be fun watching. I think you've built a good position, and I wouldn't be talking every single day. I'm not paid to do this. I've lost very good relationships that matter to me a lot. And I guess it's a little bit like Djokovic. He's going for his 25th slam. Everyone tells him he's crazy and, Sinner's better than you are. And then he went out and whooped up on Sinner. That's not true. It was a hell of a fight, hell of a match. Unrelenting force, of course. Djokovic could be playing until he's 50. Do you foresee the unmitigated slide in silver as indicating the market is about to burst at the seams and lead to a rotation into places such as Railtown? Something's going on, but I don't think that those connections connect. Let me put it to you this way. If you're OpenAI or if you're Microsoft and your stock's down, or if you're TELUS, or if you're AWS or IBM, and you're pouring money into data centers, hundreds of billions of dollars are your commitments. And you're going to build the state-of-the-art data centers, the greatest stacks, and you want your customers to come and you want people to buy this concept. of AI, not distributed GPU in Apple mobiles. Are you going to put a product out there that isn't turnkey? Are you going to put a product out there? It's not a box, but it's essentially that when somebody signs up, they're going to take it out of the box and it doesn't work soup to nuts smoothly? I don't think so. So if Railtown, and there's other competitors, they're not as big, but Railtown's not very big. But if Railtown is that layer that makes the user's experience productive, you have something. I mean, imagine, we can be negative or we can be extremely positive. Either way, we don't really know yet, but imagine if the proof of concept of Railtown succeeds magnificently at the two TELUS data centers. Imagine the next data centers coming into Canada are Microsoft's. Or imagine that Bell Canada wants it. Or imagine that NVIDIA says, you know what? We got to compete with AMD and Intel and Google. Let's lock these up. But just imagine if one or two data centers can lead to $2 billion in shared revenue, maybe more, because of the stack, including Railtown, and it works. What would all the other data centers in the world and in space pay to make sure they had Railtown? Now there will be competitors, and yeah, that's the thing. It'll shake out. But the upside, if Microsoft were to say, you know what, that's amazing, let's buy it and let's put it in our 400 data centers around the world. Now, I don't see that. I've already admitted I can get excited about what the company would be worth per share, but if Microsoft buys it, they're going to try to kneecap that. They're going to try to buy it lower and bring all that upside into their own. Anyway, there's too many variables to really come up with a perfect scenario. But in answer to your question, silver's its own investment. I think silver shows more about momentum playing and about they can sell as many paper shares on the futures market and drive this down. There's going to be a battle royale with the Western banking system and the Eastern banking system. And it's going to be, they're not going to quit. So I'd say the move in silver is more about the fact that it's doubled from 50, believe it or not. And they're just trying to drive it back down and just take money out of the market with paper. I think it'll go back up, but it's volatile, so it's not appropriate for everybody. I think silver in 2 years could be $3,000. So it has nothing to do with Railtown. The market bursting at the seams. I'll go with what Bob Farrell used to tell us. Markets climb a wall of worry. And I haven't seen that that unabashed enthusiasm in the markets. Just, well, I'm not at a desk anymore, but people would call you, they'd buy anything. I don't see that right now. So I'm not ready to call the market breaking down or bursting at the seams. Remember, we have an armada of warships headed to the Middle East to bomb, 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 bomb Iran, as John McCain so wickedly sang. Markets could be reacting to that. Oil could go to $200 overnight, $300 overnight. One thing that'll kill a stock market is high oil prices. So, I think the market is more about things like that. This recent market was all about earnings with the AI companies. Rotation into Railtown, I don't think there's going to be time to rotate. This is stretching on and on and on. But if Railtown and TELUS and, I don't know, Cohere or Anthropic and NVIDIA, the whole stack at the Sovereign AI data center in Canada, the first one, if it goes gangbusters out of the gate, you're going to see press, you're going to see research, you're going to see people looking who's in there, and the developers, I think word will spread like the secret to how to win at Super Mario. It'll go around the world so quickly, and so I like Justin's point before. I think it's a little bit of an on-off switch. I think Railtown could go from 0 to 60. I'm talking about miles per hour. Like a car. It could do it in a heartbeat. So I don't think it'll be a rotation. I don't think institutions in the United States know anything about Railtown yet. So I don't think there'll be any rotating there. They're trying to get their own deals done. I think $5 is a magic number. So ironically, if the stock were to get to $5 or $6, the rest of the move to 15 or 20 or something could happen very quickly as institutions pile in. But that assumes that Railtown does prove its worth and its platform is the must-have platform. And it could be that way. It could be. And remember, they don't have to be must-have for 100% of that market. If they get 1% of a $30 billion market, what's 10% of 3 billion? 300 million. Yeah, that's 1%. If they got 10% of the market, and that's a small estimate of the market. So I don't see your connections there. I think the volatility in silver will end pretty quickly to the downside. Then it'll go up, but it'll still be volatile overall. I don't think the market's about to collapse. No, I don't. Unless we go to war or oil spikes. And I don't think it's about rotating into Railtown. I think it's about the people that know the story who can't buy it. Once non-public information is made public, they will buy it. You get Mavericks, for example, trying to buy 5% of the company, 10 million shares. real money, constant money, put out their orders, buy all you can until it's 75 cents. He won't get it all done. And then you have Omer's Ventures, you might have Constellation Software, you might have others. So I don't think it'll be about rotating. I think it'll be establishing new positions, leaving the rest of the positions alone. That's my guess. The rotating out, the rotating of leadership, to me, will come after the blow off top to the market and then the ensuing collapse in the market. And then I think the rotation will be into, and people are already beating me to it, but it'll be into oil and gas, gold, silver, copper, nickel, any metals, maybe farmlands and orchards, who knows, but also into physical gold, silver, all of that. And that rally will be very strong. I think there will be money dedicated to defense, to health, to AI. So I do think there will be new leadership in a sort of a shaken out AI, and we'll start finding out. Maybe the Magnificent 7 plus 2 becomes the Magnificent 3. We don't know. Restoration, New York City, NextBridge hydrocarbons. Yeah, I read the news today. Oh boy, I read it out. I think it's terrific. My guess is he is in the Uinta Basin, but I don't know. I don't know, but I think it's fantastic. He gets deal flow, and he knows how to put it together, and he's honest. I think it's great. Ward Richardson, I see Pat M has a new holding pen for cash cows. Keep buying. Ralph Fenn, NextBridge got good news. Yeah, I think it's very good news. Let me see if I can go over some of what I had. I think NextBridge's news is excellent. Oh, I've got to go. Oh, shoot. I can't tell where I stopped yesterday. Oh, I did. Oh, wow. All right, 1, 2, 3. All right, let's just see. I think some of this I gave you yesterday. So I might put it up and take it right back down. Let's see. All right, now this is what I started with. I asked some questions, and the assumptions are basically stuff we've talked about. A credible buyout range would fall between 8 and 20x. And that's what I was saying yesterday. We should start using 20x, maybe, on forward annual recurring revenues, implying roughly $800 million to $2 billion. I said, what if Railtown came out this quarter or next with projectable in the future $100 million in revenue? So they say basically 1 to 2 billion, and that's kind of the Lang chain valuation right now. But that's that with room on the high side. if 250 million looks real. I said 250 for 2008. I don't know why they say, I must have written it badly. But anyway, growth. Whether there's an actual bidding war depends less on the numbers and more on whether Railtown's platform is seen as a must-own control point for agents and observability inside the existing AI cloud stacks. So Railtown's current market cap is $100 million, under $100 million. A lot. So let me start again. Railtown's current market cap is under $100 million. So getting to $100 million in annual recurring revenue by Q1 2026 would be a step function change that the public market almost certainly has not priced. Well, I think that's right. But again, I tried to word it that it's just that in the first quarter, the market recognizes that in the near future, the forward 12 months will give 100 million. I wasn't trying to say they're going to do it all in one quarter. Mid 2024 AI startup deals and hot segments, I mean, this is old data, have seen average revenue multiples in the mid-teens. That's old data, but okay. If you apply 8 to 12 ARR for a strong but not unique asset, it gets you to $1 billion, give or take 200. If the story is, quote, critical AI agent dev and observability fabric with high switching costs, unquote, a 15 to 20x, which implies 1.5 to 2 billion, is defensible, especially if multiple strategic buyers are involved. Again, this is kind of where I think LangChain is right now. So if you, I see what they're saying. Same thing. If they get to a projectable 250 million, maybe that's what they're trying to say. If it grows to 250 million quickly, a credible de-risked plan to go from 100 million in 26 to 250 million in 27 implies extremely high growth, which supports paying up on a forward multiple, not on the current 100 million base alone. Strategic buyers in this environment will underwrite against a 2 to 3 year forward revenue stack if they believe 250 million annual recurring revenue is achievable with their distribution, with their sales force, with their product. In other words, they embed Railtown into a hyperscaler or a major software as a service company. The buyer can just, it's blocked, can justify a top of a range or even above range multiple to preempt competition. Why is that one missing? Oh, there it is. So the impact of 250 million. So what's the strategic rationale to buy the company and block others' motive? For any of the hyperscalers or top model platform players, the question is this: does Railtown become a strategic control point for agent orchestration, dev productivity, or observability that they cannot allow a rival to own? In that scenario, paying a premium is partly about blocking. You buy the asset so another member of the Magnificent 7+2 cohort cannot lock it into their stack and close off ecosystem routes to your own agents, LLMs, or observability products. So I asked the question, who would bid? Who would actually bid? Logical strategics for a platform like Railtown, agent dev, observability, productivity for AI engineering include hyperscale clouds, Amazon, Microsoft, and Google, looking to deepen AI ops, observability, and AI native dev tooling. Also, major software as a service and dev tool vendors that sit close to the developer workflow. Things like observability and APM players, issue tracking and collaboration vendors, CI/CD platforms. All of that's, for example, if it helps you, who see AI agents and telemetry as core to their future. Large AI integrators and telecom cloud adjacent infrastructure providers, the kind of TELUS Uniserve type, already in Railtown's orbit, who might see owning the software layer as the key to monetizing GPU and managed AI services. So a true bidding war requires at least two of these categories concluding that A, Railtown is strategically unique, and B, they cannot cheaply replicate it or buy a substitute. If both of those conditions hold, you get a preemptive escalating process. And then I asked, could it take longer than the first 6 months? Why it could take longer? Integration and proof. Big strategics will usually want to see Railtown's platform integrated into real customer stacks. And see, this is happening all at once, is my view. They're going from 0 to 120 miles per hour being on top of the data center potentially. Anyway, they'll want to see Railtown's platform integrated into real customer stacks and scaling inside its TELUS affiliate network, not just a standalone revenue number. Market digestion. Given Railtown's current size, moving from a micro cap to a multi-hundred million or billion plus takeout usually requires time for the story to season. Turn. Governance and reporting needs to professionalize, another great English word, and a few quarters of clean growth is necessary to reduce perceived execution risk. I think this is all going to be shortened potentially by the credibility of the data center. But I'm just reading it to you. These are things to bear in mind. Internal build versus buy debates. Hyperscalers and mega cap buyers often run long internal cycles, arguing they can assemble similar capabilities from internal teams or smaller tuck-ins. Those cycles slow down bidding and can delay the point at which they are willing to pay a strategic premium. That's valid. If you want, I can sketch. All right, so I said, go ahead and sketch. I said, go ahead and sketch. But I can't find the sketch. I said, go ahead and sketch, but I didn't download the sketching. All right, so let's go boom, 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 boom. Hopefully there's a 20 in there. I need to see a 20. 23, where's that one? 27. I see a 23. I see a 24. I don't see a 20. So let me try again. Maybe I didn't download it. So let's go 1, 2, 3. All right, let's just go with 23. Well, let's not. Let me see if I can find the 20, 21, and 22. So try that. 1, 2. Try that. I can't find it. Damn it. I might just have to skip it. I can't find it. I should mark them with a pen maybe before I take a picture. All right, let's see. All right, I found 22. Let me see. I see. Let's see if it works. It'll say I can't do it. Damn it. All right, let me take some of this down. All right. I got it. All right. So here's 20. Here are 3 concrete scenarios you can plug into a model. No bidding war, soft auction, and full hyperscaler fight. So scenario 1, you got a strategic one company trying to buy Railtown, and you assume Railtown hits 100 million run rate quickly with good economics. And then you see 250 million as possible, but it's not de-risked. The pipeline is visible, but not contracted. So the dynamics, one strategic moves first, runs a quiet, friendly bilateral process. They value Railtown at 8 to 10 times 100 million in annual recurring revenue. So the headline value is $1 billion, 800 million to $1 billion. So there's high growth, but there's still execution risk, limited competitive pressure to the bidding, and the buyer thinks they can integrate it in their own system. Why this kind of bidding would happen? Larger players conclude they can approximate the agentic framework / observability themselves and see Railtown as an accelerator, but not as a must-have control point. So we got to bear that into mind. TELUS, sovereign AI partnerships, de-risk Canadian and regulated market demand, but are seen as a regional rather than global moat. And that's true, although Canada's big. I don't think, but yeah, we got to accept that. So the timing of something like this, one buyer, this computer says most likely would be the end of this year and in 2027. You need 3 clean quarters proving the 100 million. That's what the computer says. And that's traditional thinking. And you need traction out of the TELUS Sovereign factory. So, that's something conservative to consider. Scenario 2, 2 or 3 bidders. But it's, friendly. They do agree there's a path to 250 million forward revenue by 27, 28. It's credible with evidence, large enterprise logos, expanding seat usage, strong attachment within TELUS. Railtown is seen as a differentiated agentic development and observability fabric, not just another vertical app. Then you would get interest from a hyperscaler, Amazon, Microsoft, Google, wanting to deepen their AI developer tooling and observability. A leading observability or APM or dev tool vendor who fears being left behind if Railtown is locked into a hyperscaler. A telco or an infrastructure-backed buyer. Competition tension pulls multiples to 12 to 18 times 100 million, implying 1.2 to 1.8 billion headline value. And the multiples going forward look a little bit higher. Why this could happen. Buyers see Railtown as the way to accelerate their own position in AI agents and code-centric observability versus building from scratch. The block the other motive becomes meaningful, but no single player is desperate enough to go completely off consensus on price. Likely 2027. Once you've printed a year with 100 million in ARR and clear acceleration towards 200 million. Maybe we'll find out. This seems more like a normal software market than an AI market, but we'll find out. Scenario 3, full hyperscaler mega cap dogfight. Railtown becomes acknowledged as a must-own. See, I'm more in this category, so I guess it depends on your point of view. Railtown becomes acknowledged as a must-own layer for agentic software development and AI observability, with strong adoption across multiple clouds and sovereign environments. The 250 million ARR in a couple of years is not just projected, but is de-risked and probable. Owning Railtown strengthens a buyer's competitive position in AI platforms, and not owning it weakens the buyer. You need at least 2 of the big guys bidding. Hyperscalers plus a mega cap, and they decide they must own it. They underwrite against 2 to 3 years forward revenue, not trailing. That's what I've said all along. So I guess it's where you come down. And they're willing to pay 15 to 25x against what they view as current ARR to preempt each other. That gives you a plausible band of roughly 2 billion to 3 billion, skewing to the high end if Railtown is still independent. Growing at 70% plus and deeply integrated across multiple ecosystems. It might become a block acquisition embedded deeply into dev workflows and telemetry across clouds. Railtown could confer data and distribution advantages that significantly improve a buyer's core AI models and platforms. I don't know. In that case, megacap may rationally overpay by traditional multiples purely to secure that flywheel and deny it to a rival. This is 2027, 2028. So some of my assumptions, according to this analysis, are optimistic. The strategic must-own narrative takes time to mature. I'm not so sure, but we'll find out. Hyperscalers and megacaps have slow internal alignment cycles and typically want multiple quarters of data before going into an all-out auction. Well, that's interesting. That's different than what I've thought. Taking longer is actually consistent with a higher outcome. The more you allow the revenue and ecosystem story to season, the easier it is for big buyers to justify paying off the run multiples internally. Time also lets you prove that Railtown is not just a feature, but a platform. Multiple products, broad integration service, and high switching costs, which is what drives the move from 8 to 10x to 15 to 25x. And they said if you share, and I didn't take them up on that one, but here it goes through 3 scenarios using 250 million fully diluted shares. That's the wrong number. But single buyer, 2-3 bidders, hyperscaler. Let's not go through wrong numbers. I did have it corrected. So they made a map. They assigned the probabilities. The only thing I wanted you to take out of these last 2 pages are the probabilities. So they came up with a number. They gave it a 50% probability on the single bidder, 35 on 2 bidders, the friendly auction, and a 15% on the dogfight. So they're risking it. That's all I wanted to show you there. And then they gave a time frame which stretches out to 28. And then they asked me to give them more, and I said, you're wrong on your number of shares. Got it. That's actually helpful for tightening the model. So they updated it. So no bidding war, auction, and a dogfight. And they come up with the midpoint price, $4.20 a share, $7 a share at an auction, and $11.50. And I think we have to accept that this is all possible. And it shouldn't be disappointing. I don't think it'll happen this way, but it shouldn't disappoint us if it does. so they blend all these probabilities and they come up with $6.28 Canadian as the merger and acquisition value per share. I think that's low, but you see what they do. They take the scenarios, risk them, and put it in. I didn't put it in a model. All right. I asked who would buy it. Railtown's Rail Engine, a real-time event-based ingestion engine for AI agent development, appeals to cloud infrastructure providers focused on AI workloads, sovereign data, and agentic frameworks. These companies seek tools enhancing AI deployment, data ingestion, and sovereign compliance, aligning with Railtown's Canadian ecosystem ties like TELUS. Emphasis on real-time data processing for scalable agents, integration potential with GPU-heavy clouds and ML ops platforms. Major hyperscalers and AI-native clouds actively acquire or partner for agentic tech to boost their platforms. So they have Amazon here. They have Google Cloud. They have Microsoft Azure. They have Oracle Cloud. So there's the chart. Smaller players like North Flank or Railway may eye Railtown for full stack AI expansion, but hyperscalers offer premium valuations given Railtown's production heavy platform and 180 affiliates. So the affiliates are valuable. The affiliates are valuable. So here's the chart. AWS, Google, Microsoft Azure, Oracle Cloud, CoreWeave, Caruso Cloud, TELUS Sovereign AI. These are the various rationales. Amazon leads in AI services. Google, strong in TPUs. Rail Engine boasts real-time pipelines. Microsoft, enterprise integrations via OpenAI and Copilot, sovereign demand. Oracle Cloud partners with AI ISVs for generative tools, Canada. CoreWeave, AI native cloud for high-performing workloads and enhanced GPU utilization. Caruso Cloud, renewable AI infrastructure, real-time ingestion fits fault-tolerant clusters. TELUS, direct partner, could deepen via acquisition for Canadian data residency. Strategic fit. Smaller players like North Flank or Railway may eye Railtown for full stack AI expansion, but hyperscalers offer premium valuations given Railtown's production-ready platform and 180 plus affiliate network. Acquisition premiums often target sovereign AI tools. TELUS, now I think I'm getting into Ward's efforts. TELUS would be particularly interested in acquiring Railtown to deepen integration of its agentic software, like Rail Engine, directly into their sovereign AI factory infrastructure. This move aligns with TELUS's focus on Canadian data sovereignty and accelerating domestic AI innovation. TELUS and Railtown announced a collaboration in November where Railtown deploys advanced agentic development tools on TELUS's high-performance, fully sovereign cloud. Acquiring Railtown would internalize these tools, ensuring seamless scalability for Canadian software teams while keeping code, data, and IP in Canada. No one even goes there. Why keep it there? Canada's push for data residency matches TELUS's Sovereign AI Factory, launched as the country's first fully sovereign AI data center. Railtown's ecosystem of affiliates gains secure local AI compute via TELUS, avoiding foreign clouds. Ownership would lock in this network. The partnership boosts Railtown for 26 revenue through TELUS, with agentic frameworks enhancing TELUS's AI offerings like Fuel IX for productivity and new streams. TELUS's history of tuck-in acquisitions, such as TELUS Digital, shows appetite for bolstering digital AI capabilities at compelling valuation. Read that we don't get a high multiple. All right, this is from Ward. Why AI is going into space. The physical AI era has characteristics of solar system expansionism. What was that? Oh, I already showed you that one. Okay. There are some moves that define an era in technology. I will keep this short. This week, I noticed two of them in public markets and AI startups. One, XAI, this is obviously written by a Brit. XAI are in talks to merge with SpaceX in the June IPO with a market cap of $1.5 trillion. Wow. Two, Amazon is in discussions to invest up to $50 billion in OpenAI. So my number for Railtown is way out of whack, isn't it? If they're going to pay that much for OpenAI. Anyway, with additional significant sums coming from NVIDIA and Microsoft, the Magnificent Seven of big tech will have major equity stakes in big AI startups going IPO. OpenAI, Anthropic, and XAI. Elon Musk Tesla is supposedly pivoting from being a car manufacturer to a tech company with a focus on, or a focusing on, robotics and even building their own chip fab. Tesla depends on TSMC and Samsung, but still faces shortages despite expanding supplier output. How long before Tesla, a 1.3 trillion entity, merges with SpaceX in a Musk great merge, do you suppose? Michael Burry on Elon Musk recently, quote, I wrote of incentivized futurists, and there is none more incentivized than Elon. I am glad he is here in America. He will go down in history like P.T. Barnum and Thomas Edison. Michael Burry. Tesla has rapidly lost market share to Chinese electric vehicle rivals like BYD. Tesla Inc. released its fourth quarter and full year 2025 earnings on January 28, 2026, with its first ever annual revenue drop. Tesla expects spending to more than double this year to 20 billion, while investing 2 billion in XAI. Tesla is also gearing up production of humanoid robots, part of a series of factory investments. As of early 26, XAI is burning approximately $1 billion per month. Wow. I should go be a janitor there. Should be able to pick up some cash. OpenAI's open first social network to compete directly with X will have biometric gating to reduce bots. Our SpaceX and Tesla AI companies. Recent reports indicate SpaceX is indeed laying the groundwork for a massive initial public offering, with the development of orbital data centers serving as a central pillar of the company's pitch to investors. This, as rival Blue Origin, is far ahead in manifesting space infrastructure products and data centers at scale. OpenAI will go to space and do robotics as well. I speculate that OpenAI could acquire Stoke Space or Relativity Space to maintain their compute lead. When Eric Schmidt took over Relativity Space, he understood how key the orbital data center race would be with cheap solar power. Relativity Space is a promising 9-year-old rocket company, and Schmidt took over 9 months ago. OpenAI could also acquire general purpose humanoid startup. The one it's most likely to acquire is 1X Technologies. The Norwegian US company give OpenAI a vertically integrated physical body for their models, allowing them to compete directly with Tesla's Optimus in the home market. They already run a customized OpenAI model now. Sam Altman is a major investor in 1X Technologies. The extra funding from big tech not only allows OpenAI to survive its valley of death period between 2026 and 2030, when it burns a lot of cash, but to make big strategic acquisitions to rival the frontiers of the AI industry. Meta becomes a new rival to OpenAI by next year. Since Meta is doubling CapEx this year versus last, I expect Meta to emerge as a significant player in the generative AI, both on the consumer and enterprise AI fronts. They will be able to afford to do this by launching subscriptions for WhatsApp, Instagram, and Facebook with Manus AI benefits, upselling their AI service into bundles. Meta plans to test new subscriptions that give access to productivity and creativity along with expanded AI capabilities. Starlink generates about as much revenue as OpenAI does. Starlink has become the primary revenue engine for SpaceX. While the company does not publicly disclose, analyst reports, leaked internal data provide a clear picture. Might have missed one. Oh, no, I didn't. They show a clear picture of their growth and estimated recurring revenue is billions, 20 billion. Blue Origin, that I believe will also IP next year, has its own Starlink competitor that's more B2B. Blue Origin's competitor to Starlink is TerraWeave, a planned high-speed satellite network designed for enterprise, government, and data center clients rather than average consumers. I also believe a future where Blue Origin merges with Amazon is not outside the realm of possibility. This makes Amazon's valuation today rather attractive. Amazon is poised to automate its warehouses in the next decade with robotics. iPhone is still king. Down here in Texas, Bob Wales is still the king. Apple just announced a stunning sales quarter, biggest iPhone sales quarter in history. Revenues surged 23% on an annual basis to 85 billion. This staggering earnings beat allows Apple to do the required R&D and CapEx to become a major consumer robotics player in the years ahead. Apple is currently undergoing a significant shift, pivoting away from stationary tech toward a future of ambient and mobile AI. This includes an AI pin, smart glasses, and home robotics. Its coming tabletop robotic hub is the most immediate robot release. Apple is reportedly negotiating with SpaceX to leverage its Starlink network of satellites to provide direct-to-cell connectivity for the upcoming phone 18 Pro models. SpaceX is also considering a merger with Musk's electric vehicle maker Tesla. Tesla Energy's part of the business is highly compatible with solar arrays needed in space to power the orbital data centers. Tesla acquired Solar City in an all-stock deal at $2.6 billion. All right, this is starting to move into things. SpaceX is considering a merger with the electric vehicle. If SpaceX is becoming an AI company, you need the energy to power it. xAI's cash burn could be in similar trajectory to OpenAI's cash burn, and thus requires more time and funding to grow. Elon Musk and Sam Altman will essentially compete for AI compute and data center supremacy. Like I've been saying over at the last Futurist Capital, the generative AI era is a catalyst to new space technologies and under the guise of national defense spending. This is all about AI supremacy with national characteristics, but for planetary long-term goals. I think that's why they want Greenland. This will mean companies like Google and Microsoft will need to spend even more CapEx to compete and consider doing the same. While many of my readers and peers have dismissed my optimism around orbital data centers as sci-fi, this time it's actually real. The engineering barriers are minor compared to the energy efficient benefits. The cost of rocket launches will go down tremendously next decade. Favorite quote, what the railroad panic of 1873 and the 1979 Toyota Corolla can tell us about OpenAI versus DeepSeek. Bloomberg reports that Amazon is in talks to invest $50 billion in OpenAI as part of a funding round that could reach $100 billion. alongside NVIDIA and SoftBank. The stated goal is more compute, more scale, and tighter strategic alignment. The open question is what phase we are actually in. Is this pre-railroad panic of 1873 moment, where scale results in overbuild, or a 1979 Corolla moment where Japan efficiency quietly prevails over Detroit? I don't know. I don't know, but maybe I've been told. Mississippi woman. In short, this is why I believe we'll see an odd convergence between space rocket firms and AI companies. Starlink revenue will be directly tied to funding xAI's developments and the capabilities of Grok 5. Grok 5 is currently training on Colossus 2 supercluster, which uses 200,000 NVIDIA GPUs. Since Colossus 2 reaches peak capacity in March 26, that's when I expect Grok 5, the flagship model of xAI, to be ready for launch. All right, that was, the last bit was everything from Ward. Ward Richardson, William, you are right saying RT is moving 0 to 120 miles per hour. I totally agree. The magnitude is huge, but it's not out there in articles yet. By the time that happens, I think it's a $5 stock, $6 stock. But it sounds crazy right now, doesn't it? All right, I'm going to sign off. It's 6:30. It's cold here. I guess a cold front's coming in. And I'm running out of energy. But I wish everyone well. Hold in there. I think things are going to get exciting. And I've got some strategies for all of us. And Ward, thank you. Everybody, thank you. Eric, Justin, Donna. I'm leaving some people out. But thank you very much. We'll go over NextBridge maybe tomorrow a little bit more. And I agree with Ward, by the way, keep buying. Remember, tomorrow is the last day of the month for these heaviness campaigns to show results to the people they borrow money from. All right, cheers.